Whoops. Okay, I think I'm live. Let's see if YouTube gives me a confirmation. Let's center the screen. And I'm seeing the count, but YouTube has not sent me my confirmation. So we'll just give it a second. We're at the 31 now. Still nothing. Although I think I'm live, it says you are live. YouTube sometimes takes 30 seconds, 45 seconds to send it to me. And I have nothing. I'm going to scroll to the bottom. There we are. You are live. Okay, we're live. We're good. I've scrolled through some of the questions, and I see some questions on TLT. So let me give you my assessment of TLT off the top, and then I can just skip all of the TLT questions along the way. I was hopeful on the Fed meeting when TLT found some support and even moved up throughout the meeting and seemed rather strong. I was hopeful on that because that sort of suggested that some of the weakness in TLT might have been because of some of the uncertainty surrounding the Fed. We already had the election result as well, so it seemed like, okay, that seems to be behind us. The CPI number today was good. There was nothing wrong with it. It was as expected, considering the base effects that had to come off. The month over month is very well behaved. It's inflation on target. Keeping rates this high, as Powell said, would be too restrictive at this point. If you're at target, the month over month is pretty much on target. And TLT looked to perform well, and then just took a shit all day long. So that tells me that there's something else going on. I can eliminate the Fed here. There's something else that's going on. It's counter to the move in gold. So that's a bit of a curiosity of what's going on with that one. So I'm troubled by that thinking. One analyst I heard this morning came the closest and then completely messed it up. Talked about with lower taxes and lower regulation in the US, potential GDP has increased. If not real GDP, the potential GDP has increased. And when you have higher potential GDP, it tends to go with higher real rates. The reason it goes with higher real rates is if you put potential GDP higher, actual GDP can be higher before inflation shows up. So if you have a given nominal rate, let's say 4.5% on the 10-year, and you say potential GDP is higher, that means that inflationary pressure is going to be low for a longer time while real GDP increases. Given that nominal rate, much more of it is the real component. Okay. And then in the next sentence said, and also there's a lot of concern about inflationary pressure coming in. Well, hold on a second. You can't have it. You can't say potential GDP has increased and inflationary pressure has increased in the same sentence. If real GDP or potential GDP increases, it reduces inflationary pressure, because if the potential of the economy is here and we are here, you can increase growth all the way to there. If this is the potential, you can increase growth without inflation showing up. Inflation shows up where actual is above potential. The Fed estimates that potential GDP long term is about 1.8% real, around 2%. We're running 2.8%. That would be inflationary pressure because we're running above potential. But if we think potential just got a lot higher, there should be no inflationary pressure till you get higher. The real rate within the current nominal rate would be higher. It does not mean the real rate going forward should be higher. It just means of the nominal rate, the real component is more. It came closest. Okay. Higher potential GDP, good enough. So we've dealt with the higher real rate, but we haven't dealt with the lower inflation expectation yet. You can't have both arguments. And this is what I think we're getting in the market today, is there is this thinking about this is going to be good for the market, and this is going to be good for the market, and this is going to be good for the market. So the market's getting all the good news of what we think is going to happen. Oh, but this will be bad, this will be bad, this will be bad. Let's put all the bad news in the bond market. Let's put all the good news in the equity market. And this is what's been going on. In the system that we have, you cannot have just good news in equities and just bad news in bonds, because the bad news is in bonds is also bad news for equities. The good news for equities is also good news for bonds. It goes into both markets. But the market right now is just attributing all the good news, and that story gets better every day. If you've been listening to the story, it's just getting better and better and better every day. And for bonds, the story is just getting worse and worse and worse every day. One of those markets are wrong. Either the equity market is wrong or the bond market is wrong. You cannot have it both ways. You cannot say massive inflationary pressure coming and sell off gold by $200 an ounce. That's inconsistent. I mean, gold could go down for other reasons, but that's inconsistent. So we have some significant inconsistencies in the market. What was consistent today was the Russell 2000 selling off as TLT was selling off. As yields were going higher, Russell 2000 was selling off. That's consistent. And the S&P was having trouble finding higher ground. That's consistent. If you have, if you play out what Trump wants to get done, it leads to lower growth. I'm not following the higher potential growth. It leads to lower growth, because you can't just say tariffs is a one-time inflationary thing. It's a revenue generator, and everyone's going to rush into the country to build their stuff in the country to avoid the tariffs. That's a very naive interpretation, and it doesn't match history. History says that when one country raises tariffs, the other country, tit for tat, raises tariffs. And then that means this country says, how dare you, and it raises tariffs. And the other country says, well, how dare you, and it raises tariffs. And another country raises it. It's one direction. Game theory tells us this. If we use game theory to think about reactions, you would think, imagine you're the other country and the US raises tariffs, you're the leader of the other country. Would you then turn around to your businesses and say, you guys better go and invest in America and get behind the paywall before tariffs go up? Come on, you guys got to go and invest in that country over there. Or are you going to say, what are we going to do to keep these people here? What are we going to do? We got to do something to keep them here. We're not just going to let them go. We got to do something. So you have to think about strategic response. Once you start bringing strategic response in, it's very quick that you're going to see there are two big targets for the tariffs. Two big targets. I'm not going to discuss too much about it, because in the applied series, in the positions video this Friday, I will be talking about them. But there are two big targets. One of them has shown themselves absolutely willing to go tit for tat, and will go tit for tat. And if we look at where the US imports from and where it exports to, the one big market is the one big market for exports as well. It's bigger than the import. That's a problem, right? That's a problem. I mean, if I'm holding 2 of your kids hostage and you're holding 4 of my kids hostage, you kind of have the advantage there, don't you? So TLT right now, I believe, is wrong. I believe is completely wrong. And the equity market, I believe, is wrong. I believe completely wrong. Well, I shouldn't say completely wrong, mostly wrong. The bond market is mostly wrong. And the stupidity that's going on in markets right now. You know, Tesla up on the idea that he's going to share power with Trump and make all the decisions with him and have an office in the Oval Office right across from him. And they're going to collaborate on how to make Tesla great. Trump is not a kingmaker. He never was a kingmaker, and Trump doesn't share the stage. He doesn't want anybody with any audience near him. So what did he do? He put Musk in charge of the department. It's not even a department. It's like, here's a project for you. There's no money for it. There's no budget for it. There's no power that comes with it. And it's only for a couple of years. It's only for a year and a half. And come up with some ideas and send them my way and we'll look at it. I mean, that is him saying, okay, I need you back there because you have the real potential to steal my thunder. I need you back there. Tesla running up that much, inconsistent given its earnings and given the timelines it gave in the robotaxi event, inconsistent. The idea that he's going to get rid of all this regulation doesn't make any sense. MicroStrategy, there's another one that's inconsistent. Bitcoin's up, what, 33%? MicroStrategy is up almost 100%. And all of those bonds are convertible, along with the share-based compensation, that if you break it down to what you're paying per share after you dilute everything, you're not paying $80,000 or $90,000 a Bitcoin. You're paying somewhere around 250 to 300,000 a Bitcoin, but it's going up and up because the crowd is generally stupid. My point is, we're not looking right now at the wisdom of the crowds. We're looking at the stupidity of the crowds. I see no reason for me to leave TLT. We have a track record 12 months after. If you look at where are long rates, 12 months after the Fed starts cutting rates, they are 100% of the time lower. 100% of the time lower. Where are they a week after, a month after? I don't know. Sometimes no change. Sometimes they're higher. Sometimes they're lower. The short term, who the hell knows, right? But a year after, 100% of the time, long rates are lower. 100% of the time. So there's my assessment of TLT. I think there's something bigger going on. I think it's more of a short-term thing. But unfortunately, we have a narrative-driven market. We don't have a fundamentally driven market anymore. We have a narrative-driven market of increasing perfection, where the Trump administration, mostly Trump, let's not call it the administration because he doesn't like that, where Trump is being elevated slowly, day by day, to almost godlike market status, that everything is going to work out. Everything is going to work out perfectly. The US is going to get all the money in the world. It'll be the center of the world. No other country can compete, and everything will happen in the US. The dollar will be strong. Inflation will be gone. Interest rates will be low. Everybody will have a job. All of those things are simply not going to happen because of the trade-offs that are involved. So equities are wrong. TLT is wrong. Now, in the short term, the path does matter. And the path, well, it's uncomfortable, right? I mean, I watched TLT go up today and I thought, okay, I don't have to worry about that. I think that's behind us. And then later in the day, I looked at, what is it now? What is it now? Right? And I fully expected when I looked to see S&P up another 60 points because, of course, all the good news belongs to the equity market and all the bad news belongs to the bond market, right? But S&P was like, maybe this is a problem. So I think the narrative, everyone's got to get their narrative straight. Is it going to be higher potential GDP and great growth? If it is, your inflation potential is higher. The level of GDP before you hit inflation is higher. If the US is going to be the center of the world and all the other economies are going to suffer, all the demand, global demand will drop. That's also deflationary. If we're talking about the high level of productivity and AI that's contributing to higher potential GDP, that's deflationary. Productivity, higher productivity, lower unit costs, that's deflationary. You cannot say the two things in the same sentence. One of those things are wrong. I think the equity market is probably 50% wrong and the bond market is 50% wrong. And a better price for TLT is probably some 10% low. I mean, 10% higher, and for the equity markets, some 10% lower. I think if you got to those levels, I would say, okay, this seems about right. So, with that done, I'm going to skip all of the questions on TLT. And before I start again, let me deal with gold, because there was a whole bunch of questions on gold and what do I think is going on with gold. There are. It's hard to bring gold down to one thing. This is the one thing that's affecting the price of gold. Gold is down some $200 an ounce since before the election. The big thing about the election was the outcome. What if Harris had won? Trump would have denied the election. You know he would have denied the election. So there was some concern about would that result in violence and the heading into a potential civil war, perhaps? Who knows, right? But he would have denied the election. He would have said it was, because he won, that's not going to happen. So it's not as if gold was afraid that Harris was going to win, because you can't have a Democratic government. They were afraid of Trump losing and what would happen if Trump lost. Well, he won, so the worst of the expectations aren't going to happen now in terms of that. You also have US dollar strength. Whenever the US dollar rises, commodity prices fall because they are traded globally in US dollars. So to keep the price of gold constant in euros and British pounds, Australian dollars, Canadian dollars, as the US dollar is increasing, the price of these commodities decrease, so that when you look at the exchange rate of the euro versus gold or Canada versus gold, it's constant or fairly constant. Even though the US dollar is moving a lot, the commodity price adjusts for it, so other currencies are constant in a commodity relative way. So there's probably a good same reason aluminum's come down, copper has come down, copper's come way down, and US dollar's gone up. Also, it is it's an opportunity cost, right? You're seeing Bitcoin fly, you're seeing the S&P fly, Tesla fly, MicroStrategy fly. So oh my god, I'm missing out. So you're going to get out of assets that don't yield anything. Gold doesn't yield anything. There's GLD. So ETFs recorded a net outflow in North American ETFs. I don't know about global, but North American ETFs, an outflow since the election, just since the election, something like almost $1 billion of outflow. And these ETFs hold physical gold, so they have to sell the gold to generate the funds. So you have outflows from ETFs, you have the strength of the dollar, you have an election that, okay, so there's going to be no violence and no overthrow of the government. That's fairly good. And then maybe, there's some belief, maybe, which I think is unfounded, that on day one, there'll be world peace, that Trump will solve all the global wars on day one. It'll all be taken care of. That is the narrative out there, is that, oh, he's going to do this, he's going to do that, with no plan. He's going to do that, and everyone's just going to bow to his will. By the way, I'm not sure if you've heard that either. And he'll get it all done, and maybe he'll win the Nobel Peace Prize next year, and on his death, the Vatican will investigate him and say he's a saint. That's the narrative that seems to be going on right now. So maybe gold has a lower geopolitical premium from people who believe that on day one, on January 20th, as soon as he swears, he'll head to the Oval Office, make a few phone calls, and there'll be world peace. All wars everywhere will stop, and it'll be beautiful, and all the water in the world will be clean, the air will be purified, global warming will be over, and everyone will be happy, and wherever it's going. So that's the big problem with gold, is it's fighting those particular narratives. If you get a change, if reality starts to show up, which I think it should today, I'm not sure if you saw this, of who he's putting up for Attorney General, for the head of the Justice Department. I don't know if you saw this. When I heard it, my jaw just dropped. I was like, what? He is going for the yesest of yes men. He is putting someone in there that will do his bidding, no questions asked. He doesn't want a thinker in there. He doesn't want an independent person in there. He wants somebody that he calls up and he can say, investigate this person and charge them. And they will. And they will, without a question, they will. Matt Gaetz, of all the boobs in Congress that you can pick, Matt Gaetz, this is where he's headed. This is where he's going. He is putting people in place who will simply say yes to everything. He is setting up inside his little democracy. He is setting up his dictatorship. He's putting his loyalists in place, and he'll do all the petty little things he wants to do. He's not going to solve world peace. He's not going to be the savior of the world. He's not going to understand the tit for tat that goes on. He's going to understand that he has to win, and people didn't bow down, and they will bow down, damn it, or I won't stop. He doesn't care about the country, he cares about himself. So with that appointment in there, it would seem to me that we should be more concerned about safety and geopolitical risk than less concerned, because he's showing who he's going to be, and he's showing what his administration is going to be. I think gold should be getting a lift, but it's not. There is a willingness to believe the narrative that's going on right now, and I believe that is wrong as well. There, TLT gold done. Let's get on with some questions here. Already did the first one. Fundamentally disagree with cryptocurrency as an investment class. Feel foolish not to capitalize in the recent run-up with the crazies. How do you reconcile these two thoughts? I just ignore it. I just ignore it. I had a blood test today. I don't know if you could see that on my arm, but I had to go and get a needle, and they took out some blood, and they're going to test my blood to see if I have cholesterol, blah, blah, blah. You got to get that done. And sitting in the room, what do you hear? What do you hear people talking about? Crypto. Even one person looked at me and said, "You into crypto?" No. I was going to say something insulting, and I said, no. And I just turned my head away because I didn't want to keep talking to this guy. When everybody's talking about it, who's left, right? This is the thing about momentum is it has no fundamental basis that you can look at and attach it to some fundamental value and determine how far away you are from its fundamental value. It has a belief value. People have to believe in it. You just got to believe. You got to believe in it. And it has momentum. That's all it is just, it's a momentum effect. Ask yourself why you want to invest in it, because you want more of your own dollars. You're not doing it to get the cryptocurrency. You're getting it to get more of your own dollars. So you have to have some bona fide reason why you think its value will be higher in the future. Now you can pull out all there's inflation, there's this, there's that, there's printing money, it's decentralized, blah, blah, blah. Great solution. Now find a problem that solution solves, right? You can chase it, but keep in mind what you're doing. You are chasing momentum. You're not chasing a fundamental value of anything. You're chasing momentum with a bunch of bros. It's primarily men doing this. Primarily, like 99%, it's a bro thing. And I'd be surprised if you took a sample of the bros, if the average IQ was anything greater than 100. You have two groups of people. You have the left tail of intelligence that think that just buy into crypto. And then you have the right tail that said, hey, these crazies are going to buy into crypto. So there are two ways to trade something. You could trade the asset or you could trade the crowd. I believe the smart people are trading the crowd. The smart people in crypto are the ones trading the crowd. And then you have the ones that are actually trading the crypto who just have this strong belief that, oh, no. 14 years later, there still is no use case for it that is big enough to justify that market, but you can't tell them that. It's momentum. If you are comfortable with momentum, as long as you know how to trade momentum, momentum can be fun. It's an easy and fast way to make money, but it's addicting, because when you make money that fast, it's hard to go back to making money the traditional way, which means you don't know when to leave momentum and you end up giving everything back, if not more. So just be aware it's momentum. What do? Nothing. I'm uninterested in crypto, 100% uninterested in crypto. TLT, already talked about that. TLT talked about that. Oxy, $1 a share versus the consensus of 74 cents a share. That's pretty good. They were up in pre-market, and then they sold off quite aggressively into the 48s. And I thought, wow, I was out getting a blood test, so I wasn't listening to the conference call. I didn't listen to the call or anything going on. So I thought, well, it must have been guidance. There must have been something there. maybe the price of oil, and then they came back into the day. Buffett isn't selling any of his Oxy, which I think is a good sign. I'll continue to hold. I haven't been buying because I do expect that there'll be a couple of quarters of weakness in oil, because I think inventories will continue to build. And if you start with these tariffs and it starts going tit for tat, it is going to reduce global trade, which will reduce global growth, not increase it. It will reduce it. So I'm not sold on the idea of building my position any bigger in Oxy than I have right now. I flipped it over to in the money puts as opposed to being long the individual stock, and I will keep doing that. A stock that can stay range bound, 48 to 52 for a period of time, you can do quite well on with options. If you have the options, you can do well on a range bound stock. I'm going to hold for a while. Okay, already did that. The more I listen to you, the more I feel, oh, I thought you were about to insult me. The more I feel that I don't know shit about shit. Like you said, can't think of complex systems in a linear fashion. How and where do we acquire wisdom like this? So when you undertake a PhD, you stop learning about the field and you start learning about the philosophy of knowledge, because you're being trained to produce new knowledge. So you first of all have to recognize, well, what is knowledge? If I'm being trained to produce new knowledge, I should know what this thing is called knowledge. And you experiment with a lot of theories of knowledge, a lot of ways of viewing the world, a lot of theoretical lenses through which you can view the world. Whether it be positivism, which is a quantitative approach, a statistical approach, whether it be a symbolic, however you, I think there's so many theories that you can work with, and each field has its own schools of thought as well. So you experiment with a lot of theory and a lot of ways to see the world. Game theory is one way in which you can review or recast some relationships in economics that don't seem to make a lot of sense. So we can look at things like, why would individuals ever select an option that is against their own self-interest? Economics tells us that would never happen. Yet there are many instances where individuals do choose outcomes that are against their own self-interest. Game theory has something to tell us about that. In more complex systems, which the economy is complex, any social system is a complex system. There's research, and especially the more positivistic research, that says I have variable A and I've got a whole bunch of other variables and I've used a regression and I find that variable A, my variable, can explain a certain percentage of the variability in the outcome variable. So I have some kind of causal factor. Well, with regression, you can't imply causation, but you can say the presence of my variable can explain some of this variation. So there must be something. If I raise or lower this input variable, I can raise or lower the output variable. There's something there. But in social science, if you're able to explain 4% of the variability, that's a big deal. In science and hard sciences, that's nothing. That's dust in your in your laser beam. A piece of dust got in your laser beam. That's why you were off. But 4% is big in social science. The reason why no variable in social science will ever explain 90% of the variability is because in a causal form, A may lead to B. In a clean causal sense, A may lead to B. But when you have A, you'll have less of something else or more of something else. That's the trade-off that you make in a system. You can't get more of one thing without getting less of another thing or more of something else. There's always a trade-off. Think of Think of a complex system as a balloon. And what you're going to do is you're going to say, well, I'm just going to squeeze this part of the balloon. What happens when you do that? The other part of the balloon expands. You go, oh, well, I'll squeeze that back. The other part expands. There's the trade-off. I can make this part of the balloon smaller at the cost of making this part of the balloon bigger. That's a system. So if you have A, it may cause more of something else or less than something else that will then have an effect on B. So you could say, I can explain 4% of the variation in B. Yeah, because A also causes this and causes this, which then has an effect on this thing. There are trade-offs. There's never just a one-off effect where I get more of this, I get more of that. So you experiment with a lot of theory. That's what you know, if you're saying how do you acquire wisdom like that, start thinking more along the lines of as opposed to what knowledge can I put in my head. Start asking, how can I recognize that something is knowledge, and look at the theories of knowledge, and through those theories of knowledge you can then start to see, I can look at the phenomena this way, I can look at it this way, I can look at it this way. So you can look at something through a number of different theoretical lenses, none of them being 100% correct, but each one giving you a different view on the world, as opposed to just, you know, the positivistic sense where I have a sample, I've done a regression, here are my numbers. That's just one way to see the world that's very linear and misses a whole bunch of the complexity. Okay. Will you be doing a video on Oxy earnings? Maybe, I don't know. I haven't really thought about it. What's your view on how has Mark Meldrum CFA prep evolved since you've sold? I've noticed little improvements, investment and feedback isn't considered. Yeah, I'm going to pass on any assessment of what is or is not going on, or perceptions, if it's more of a perception and less of a reality. This is outside of my comfort level. And when I say I'm going to pass on it, it's not because I have nothing good to say or nothing, because everything I would say is either good or bad. It's just, if I say good things, you would say, well, what's he going to say? So there'd be very little credibility in anything good I say. If I say bad things, then it's just not a good outcome for me to say bad things. So the best thing for me to be is neutral. This way here, it doesn't bring in the question, well, you're saying what you're saying because you have to say that because. So that's the easiest charge. So the easiest thing to do is say no comment on any of that. I heard you bought a big Costa Rica house because you thought you will need to live there for 6 months. Yep. But now you've discovered that you only need to stay there 20 days. Correct. Where was the issue? Bad advice. Yeah, bad advice. But listen, it's Costa Rica. One thing you'll learn down there is very few people know what the hell they're talking about or what they're doing. The country is full of bad advice. It's full of a bunch of people trying very little to be less than average. Oh, man. If you've ever lived there and you've ever had to do business in that country, you'll know exactly what I'm saying. I mean, just the idea of people showing up is incredible. If they show up in around 2 to 3 days after when they said they were going to show up, that's a victory. I'll be there Monday at noon. If they show up Thursday morning, it's like, oh my God, you're early. You were supposed to be here at noon on Monday. I wasn't expecting you for another 2 weeks. That's pretty standard. That's pretty standard. And you can get 6 people to come out and look at a problem, and you'll get 6 different answers as to what the problem is, because no one really knows. No one really knows. No one really knows. To be a plumber, you simply have to wake up one morning and then you say, plumbing. Yeah, plumbing is something I want to do. There's no licensing body. You're just a plumber. You're just a plumber because you say you're a plumber. It's just a country full of bad advice. You can't take anybody's word for anything. So yeah, bad advice, but that is sort of the norm. How do you know it's only 20 days? I verified it with an immigration lawyer that was, um, from what I can tell, better than the one I currently had, and then I verified it myself. I followed through and followed the chain and verified it myself. All the searches I made say you need to stay at least 183 days. Same here. That's why it was so easy to say, okay, well, I guess that's the thing. All the searches I made. So all of those websites are written by people in Costa Rica who also have no idea what the hell they're talking about. Somebody woke up one day and said, immigration, I'm going to do that. And then just careful down there, right? All right. Oxio, I talked about that. Quantitative trading, advanced version of technical analysis. Not really. Technical analysis is the study of price and volume. It's the study of the past. It's okay. The price did this and the volume was this, and there are patterns on this chart. And let me draw some lines on this chart. Now, there are some quantitative techniques in technical analysis, but quantitative analysis is more about looking for, I'd probably say, attractor points or relative value that based on large data sets, you find some companies on certain metrics fall either above or below some kind of fair value curve that you have. There could be some value in that because quantitative analysis is not just using price and volume, but is using some fundamental values from the balance sheet, the income statement, etc. So there is some fundamental information, but it's less about what's the story here, what's the narrative, and what's the trend, and more about what's the relationship of these accounts to the peer group that also have the same business or in the same line that have different relationships. Which one is more out of line with their relationship? You say happiness is finding meaning of life. No, happiness is finding meaning in life, not the meaning of life. That's more of a philosophical venture. Finding meaning in your life is more of a practical consideration. What gets you up in the morning? No matter how bad your day is, at the end of the day, do you say, at least I'm doing something X? I'm doing this. So maybe it's, animal rescue, and at the end of the day, you're out of funding. You can't find any new funding, but you look down at the dogs you have and how happy they are. And you just, that's all that's what matters. You have this meaning that drives you on the next day. It doesn't bring you down because that's what drives you forward. What drives you? What meaning do you have in your life? Not meaning of life, right? Did you find yours in the markets? Not really. I wouldn't say that the markets are my meaning. No, I don't think that would be a good statement to make from anybody. It's a shallow statement, I think, to make, because what effect are you having? I'm never more. I don't want to. It sounds corny. I'm never more alive, but I'm never more driven than when I'm teaching. When I can do that, when I can take what's complicated and complex and break it down and present it, and you get a bunch of, I get it now. That right there is better than anything. It just so happens that I do that in relation to finance concepts. I could have gone a different direction years ago, and I'd be here doing it with biological concepts, maybe, or chemical concepts, or engineering, or computer science, or something. I had within me that ability to take something complicated and break it down, because I understood the mind of a learner. And it wouldn't have mattered what subject matter. It just so happened that, well, my background was economics, accounting, finance. So that's basically where I ended up. I'd be doing the same thing. I really believe I would be in the teaching profession regardless of which pathway I took. There's your meaning. That's what drives you. Can Donald Trump be regarded as an Ubermensch within the framework of Nietzschean philosophy? He seems to represent a strong character and has a master mentality, which Nietzsche considered desirable. There's where I would say I don't know that he has a master mentality. If you say, what has he achieved? I don't know that that's enough. I don't know that is the measure of it. It was much more sublime than that. It wasn't about you've achieved a lot of great things, hence you are. You've achieved nothing, hence you're not. Right? And it really, I think it would be shallow, and I think Nietzsche would probably be appalled if you said that your measure is your wealth, that the more wealthy you are, the more likely you are this. Because you can be this without any outward signs of success. And you can be antithetical to this with all the outward signs of success. So the master mentality, the big thing in the master mentality is that you are driven towards consequences, towards outcomes. That's what drives you, is getting to the outcomes or the consequences that you deem for yourself. You've determined that this is again, I don't want to use the words good or bad because he would freak out over that, but let's just put that aside and let's just put a very light touch of good or bad on it. You say, I'm achieving this outcome because I have determined this is good for me and that this is a good thing, regardless of what any other accepted morality might say. I see it as a good thing. So I'm going to do this. This is my outcome. This is my outcome. Not Trump. What is antithetical to that is if you focus more on your intention and not your outcome. Trump is intentionally driven. He intends to hurt people. The master morality has no concept within it about oppression. It's that my actions are not here to oppress you. Through my outcomes, there may be a situation in which you cannot do what you want to do, but that was never my intention, was to stop you from doing things. My outcome may have hindered what you were doing, but it was not my intention. Trump's intention many times is to hurt people. Nietzsche would not have seen that as a good thing. He would have said, no, you are tied too much to trivial things. You're tied too much to worldly things. You haven't risen above all of that yet. You have to move past the intention. And if somebody is oppressed by what you do, it's an unintended consequence. You are not to blame for it. And you should not be held accountable for it. And your morality should look past that and say, I'm not going to be taken down by that. I'm not going to spend any time thinking about that because I didn't intend that. So no, I wouldn't see Trump as Ubermensch, but I would see Musk as an Ubermensch. He is driven by outcomes. He's not driven by hurting other people. He doesn't want to hurt other people. I truly believe he wants to do everything he says. I truly believe that in his mind, he is going to get to all those places and do all of those things because he deems it right for him. He's not doing it to hurt other people. If some people die in vehicles in his pursuit for self-driving, his argument is that it's still safer than human driving. He's not going to be hindered by the deaths of some people on his way to creating what he wants. He's not held back by that morality. He didn't intend for them to die. Just on the path to getting the outcome, some people will die. If you have robo-taxis, there will be some accidents. Some people will die. It is the price of getting to that consequence. In that sense, he would be Nietzsche's Übermensch. He's really not that concerned with the money. I mean, we can see he's really not that concerned with the money. He doesn't live that kind of lifestyle, right? He's driven by the meaning he has in life, regardless of what other people say. To sit on a stage and tell advertisers, go fuck yourself. Do you see, you know what I mean? Like, you could see right there that he's not going to bend to the will of the crowd. He's not going to do it. That is more in line with Nietzsche's framework than Trump is. Trump, I think, would be the Nazi version, without calling him a Nazi, but the Nazis really did take Nietzsche's philosophies and really twist them into what the Superman was, what he was getting at, the Übermensch, what the Superman was. Trump is more along that interpretation. Musk is probably the more purist interpretation, that if you had to pick one a good example, it would probably be Musk. That would be a good example. Any advice for a young investor dealing with FOMO? We sold an overvalued growth stock before a binary event. The earnings announced not as bad as we thought, and the stock goes up twofold. Yeah, listen, it happens to me. You watch the action on something, you look at the fundamentals, you make the best decision with the information that you have at hand, because we're not part of these companies. We're not there every day. We can't see exactly what's going on. We have quarterly information and limited information. There are times when you sell at the right time. There are times you sell at the wrong time. There are times you buy at the right time. There are times you buy at the wrong time. You can't control the outcome of those things. You can only control the risk that you take on. Some of the risk is buying something that goes down and selling something that goes up. It's two-sided, right? What can you do? That's going to happen. Don't go chasing it. You sold it for a reason. As long as you're selling it for a reason, if you say to yourself, this is up a lot, I should sell it. That's the wrong reason. It's the wrong reason to sell something just because it's up a lot, because being up a lot may be absolutely justified. In fact, it might not be up enough. It may be justified if you say it's up a lot. GM, $57, $58 from the low 40s, had $28 a year ago. It's basically 100% increase. It is the best performing auto stock year to date. If you go to January 1st and look at all the auto companies in the world, which one has had the best year-to-date performance? Not Tesla, GM, but it's dirt cheap. At less than 6 times forward earnings, it's still dirt cheap. It could trade for 20 times. I think it should trade for 20. That's a $200 stock. So to say I'm going to sell it because it had a great run is not a reason to sell. It's a reason to maybe protect yourself from the downside. It might be a reason to maybe use some options to protect yourself, take a little bit off the table, but not your whole position. But before you sell something, revisit your thesis and say, is it still in play? Do I still believe everything I believed? And was I right? And the price movement is simply it just working out. Right now, if GM runs from here to $90 in the next few weeks, at that point, I'd say it's a little overdone in the short term, right? A little overdone in the short term. I would do that, but I would not be lightening up on GM at $58 when it's still among if you look at the most expensive to the least expensive in terms of a multiple of forward earnings, GM's in the bottom 2% of the S&P 500. It's still one of the cheapest stocks in the S&P 500 that just keeps performing. Huge cash flows, excellent profitability per vehicle, making progress on every one of its metrics, and buying back shares and continuing to buy back shares. to get no respect to me seems odd. So before you sell something just because the price has gone up a lot, ask yourself, maybe I was just right. Maybe I was right and this is the right thing and I'm going to continue to hold. Or if you are going to sell it at a price, ask yourself, what price would I buy it back at? If I sold it at $60 and it pulled back to 55, would I get back in again if it went down to $55? And if your answer is yes, then don't sell it. If you're only going to get back in because you sell it, you got to pay tax. Chances are, after you pay tax, if it fell to 55 and you got back in, it's the same thing. It's like, oh, well, after I pay tax, it's basically the same thing, right? That you haven't actually made $5 by stepping out and stepping back in. On an after-tax basis, you needed it to get to 55 just to break even after you paid the tax. So revisit the reason why you want to sell some things. Tempted to chase momentum, all-time highs. Yeah, that is a problem. Knowing that if I buy it will go down. Any psychological tips you can share for dealing with FOMO temptation? Selling, stick with your plan. What kind of investor are you? Right? What kind of investor are you? And stick to your and stay in your sandbox. Don't go hopping around other people's sandboxes. There are momentum players and they've learned to play momentum. There are growth investors, they've learned to play growth. I like value. I like deep value, but I have an ability with options to do very, very well. So even if something moves against me, it's okay. It just takes me more time, but I'll be okay. I'll be fine. I prefer to play in that arena because I tend to do quite well. You know, every now and then you get losers, but no one has a 100% record. No one does. Find something that you're good at. Find a sub-industry that you understand or things you understand and focus on that. Don't try to be everywhere. And don't chase something. Look at the value of what you're paying for it and then decide if that's something you want to do. If you decide to be a momentum investor, well, then that is what you would do. Momentum investors look for things that are going up. Okay, this has gone up like 15% in the last 4 days. I'm in. That's their signal for being in on something. Or they only buy stocks at 52-week highs. You know, if that's what you want to do. Momentum, I think of all the factors to invest in, momentum is the best paying one, but it's a brutally hard game to play because you don't sleep well at night. Because one event, you could wake up the next day, and especially if you play a small account and you play fully invested, you could be out of business for the next 6 weeks, just waiting for that thing to recover, or you take the hit, which means you need a bigger win just to get back to even. And usually these players walk themselves to zero. Don't you think well-leading unions are important for workers? Is not the same for workers to negotiate collectively to do it one by one with the company, help to reduce the asymmetry of power? I have no problem with that function of unions, one voice. I have no problem with a group of people saying alone, we are not as strong as we are together. I have no problem with that. The problem I have with unions is the right to strike. It is a weapon of mass destruction, of mass economic destruction. It is the sacrifice of the many for the benefit of the few. When a union goes on strike, many people lose their jobs while the union's on strike. But they don't give a shit about the other people. However, if their company's in trouble and they need a bailout, they like to point to all the people that will lose a job if I lose my job. My job has 7 people in the value chain supporting me. You got to give me what. But every 3 years, they no longer care about those people. I disagree with the right to strike. I think everything should be binding arbitration. Is you negotiate, you have a contract that's due, you have up to 60 days past your contract date to come to an agreement while everyone keeps working. If you can't, it goes to binding arbitration. Nobody walks the picket line. Nobody's out of work. No other supplier has to lay off their staff in front of Christmas. Nobody suffers. It goes to binding arbitration. It's done. It's the right to strike that I have a problem with, not necessarily the union. It's the right to strike that I have a problem with. That strip unions of the right to strike. And I'm sure more companies that did increase their membership, more companies would say, oh, well, we don't mind the union then. It's better than having 3,500 workers that we have to do reviews for every year and negotiate with. If there was one voice, yeah, we don't mind that. It's every 3 years they want to hold a knife to management's neck and say, yeah, you've done pretty good over there. We want some of that pile. We want some of your pile. You've done pretty good. But that was the deal. I risk the capital. You put in your hours. I give you money for the hours you put in. I could lose everything, but if it hits, I could make a lot. You can't just look at my pile and get jealous now. You could have at any time bought shares of my company because they're publicly traded. You chose not to. You could have bought shares of the company. You chose not to. That's how you share in my pile. You don't just get to put a knife to my throat every 3 years and say, give me some of your pile. I got a problem with that. Just because the company made a lot for the shareholders who risked the capital, workers think, oh, we built this company. No, you didn't build this company. Capital built this company. We gave you a job. If anything, we gave you your home, we gave you your car, we gave you the clothes on your back, the food on your table. The company did that for you, and you're going to hold a knife to our throat and want some of our pile? Fuck you. That's my problem with unions, is the power to extract gains that were not theirs to begin with, for no other reason than if you don't give it to us, we'll shut you down and you'll get nothing. That's where I have a problem with unions. But other than that, so do I have to pay $550 US each year? What are we talking about here? $550 US each year is a recurring fee for applied level. As you said, there's one. Oh, no, I never said that. No, I know. It's amazing how I can say a sentence. I can say the alphabet in a video, and I'll get 50 questions about I'm confused. I'm confused. I thought no matter what I say, I always have these questions where it's like, how did you come to that conclusion based on what I said? Starting January 15th, starting January 15th, anybody who buys at that point will be under the new system. As of right now, this affects nobody. Are you an applied level subscriber? If you are unaffected by any announcement I make about anything. Never applies to you. I could say I am no longer taking in new subscribers. Doesn't affect you. It doesn't affect you. It's only starting January 15th. So this wouldn't affect you at all. And it is for the two sides, the analyst and the asset manager side. If you are a markmeldrum.com subscriber, the price comes all the way down to $550 for the whole thing. You only pay that once. You never pay that again. You only pay that once. That I never said anything about that being the case. And you get everything I put into the applied level for 1 year. After that, it's locked. Locked meaning that any new content I put in, you don't get. You don't get the new content, but you'll never lose access to anything over the course of that year. If you continually want new content, it is a recurring fee of $25 a month. But you never have to pay the $550 again. It's just $25 a month. You may use it for a year and say, I'm not getting much more out of this. You've been through all the content. You say, okay, I'm pretty good right now. I'm not getting any incremental value out of it now. Then you're done. 5 years later, you log in. Everything is still there that you had. You don't lose anything. It doesn't end after a year. It just means you don't keep getting the newer editions year after year. That is by design. I started with a very low price, and I needed a certain amount of critical mass, because when I started, I wasn't quite sure what it was going to be. So have a low price and then experiment. Listen to the feedback, and you modify, you add, you subtract, you say, well, this didn't work, but this really worked. Okay, let's do more of this. Yes, I can see this is really working. This is not working. This is not okay. And you slowly evolve with your customer to a point where you say, okay, I have a large enough base such that there's a critical mass of conversation going on. And I've gotten the content to a point where I can see where people are finding the value. Great. Here we go. Now, let's put the business model in. You can't continually have one price for a lifetime access and that's it, because there's a cost. Every year, every subscriber has a cost. Every year they have a cost, and a rising cost, because Amazon wants more money. Every supplier wants more money every year. So unless you find a way later on to add a recurring fee, it is an unsustainable business model. It's unsustainable. That was the goal. At some point, you get to a certain level of subscribers and you say, okay, that's done. Now let's move on to the business model. You don't have to pay a recurring fee if you don't want to. You never lose access to your content. When you sign up on January 15th, for the full year, you'll get everything I put in there. Every week, new content comes in. January 15th of the next year, it's $25 to keep getting the content for the next month. And then it's $25 each month after that. So if you say, I don't see $6.25 a week of value in this. If you don't see $6.25 a week of value in it, then what would it matter if you got all the new content? If it's not worth $6.25 a week to you, then who cares? Then it's not worth your time. Your time would be better spent on other things. That's what that is. So no, you don't have to pay $5.50 each year. You only pay it once. The recurring fee is $25. And if you're already an applied level subscriber, nothing I say applies to you ever. You're grandfathered in for the rest of my life. I'd like to say for the rest of your life, you're grandfathered in, but it'd be the rest of my life. If I get shot tomorrow, well, that's the end of my content, right? But I don't live in the US. I don't know that I'll get shot tomorrow. Let's see. TLT. If you are duration neutral, well, I'm not. Long, short maturity and short, long. Oh, if you are duration neutral, okay. You're long, short maturity and short, long maturity. Whew, that's a lopsided trade to be duration neutral there. You'd have to have $16 of T-bills for every $1 in a bond. No, you'd have to have $16 in 1 year T-bills for every $1 in TLT. How can you profit from a change in interest rates if your duration is zero? Because you're betting on this. You're betting on the curve steepening or flattening. That's what you're doing when you're duration neutral. In other words, you're taking this out of the picture. You're taking levels out of the picture and you're just betting on a steepening or a flattening of the curve. Do you think America can become the only economy in the world? No. And US equities go up forever? No, because that ignores competitive response. That assumes that every other country will go, looks like we lost. What can you do? It looks like they won. Let's send all our capital and all our entrepreneurs and all our money to America. Not going to happen. Not going to happen. Is Europe just going to roll over and say, Is China just going to say, what are we going to do? Are all the mines in the world going to close and the only mines in operation are in the US? 350 million people out of a world of 8 billion people, and all the economic activity will happen in the US? No, not going to happen. Because if I'm losing, I got to do something to win, right? I got to do something to win. I have to. Trump is not going to fundamentally change the world to that way. Everyone's not just going to take tariffs and say, oh, well, we better move to the US. We better let our companies move to the US. And all the stuff that's coming in, we won't put tariffs on any of that stuff, right? But we'll live with it. We'll just take it. No, not going to happen. That ignores competitive response. It just assumes that everyone's going to take it. What is success and happiness for you? I'm generally happy. I don't know why. My doctor asked me that the other day. I finally got in to see a doctor. It was at a clinic, but we were talking about any conditions. My blood pressure was great, anything fine. He says, no stress in your life. Are you happy? And I said, well, happy is the wrong word. Do I live a life of meaning? Yes, but you can't be happy every minute of the day. And then, of course, why? He says, well, because stuff happens. I mean, stuff happens. You walking along, you stub your toe. You can't say, "Hi, I'm happy." For that little moment that you stub your toe, you're not in a very good mood. Somebody, you're out in a parking lot, you say, "Oh, there's a parking spot." You're about to turn in, somebody just zips in front of you. It's like, really? I mean, you saw me, like at that moment, you're not, so you're not happy every moment of the day. I think happiness is, is sort of the wrong thing to look at. Generally, at the end of the day, if I say, am I net happy or net depressed? It's like, God, got very little to be depressed about, really. I got some issues and problems that came up during the day. Like, now I got to solve this problem. Now I got to solve that problem. That's a pain in the ass. It's annoying, but I don't go to bed thinking, what a stupid, sucky life I have. Things have to change. No. I have meaning in my life. I'm generally happy. Now, there is a saying, and I think it comes from people who don't have money, that say money doesn't buy happiness. I beg to differ. What money does is it buys away all the shit that would normally take you down in a day. It buys away all the stress that you don't have to deal with. You don't have to worry about how you're going to afford anything anymore. And it frees you up to be who you want to be without the heavy economic administration of life always breathing down your neck. How am I going to get the $600 to fix the car? Here's the utility bill. Here's your phone bill. Here's your cable bill. What? It's up again? Oh, my rent is going up 12%. Oh, come on, man. You got to be kidding me. And it's those little things, nickel and dime you, that for most people, you can't just simply throw it off. I get it. There is an economic reality to life, and it will weigh you down. That I don't know, in a system that we have, if you can ever find, especially if you are economically treading water, that you can ever truly be the person that you think you can, because you've got to spend so much of your time and selling so many hours of your life just to pay the economic reality to life. However, I also think that any other system that doesn't rely on competition would be net negative for the entire system. So there's, there is a certain amount of happiness that money can get you. The more you have, if you're happy about the fact that you have it, you're happy about the wrong things. Having it allows you to be happier because it eliminates a source of constant stress all the time. That's the one thing that I can say is sort of a truism there. But I don't chase happiness. I chase meaning. Do you measure your glucose level? No, I don't. No, I don't. I don't use anything like that. And the comments just flew right past. Every now and then, it wants to bring me all the way to the end. I know there's a lot of questions ahead here. Let me speed up. What is the impact of Trump policies on Canada? At this point, it's too early to tell, but this new border guy they have is saying that the Canadian border is a crisis. It is something to look at. I agree with him, but it's not because of Canadians. It's not because Canadians are pouring in to the U.S. It's because there are immigrants that land in Canada but then head to the U.S. It's not people like me fleeing into the U.S. and sneaking across the border. People like me can walk right into the country. You show your Canadian passport and you go. But there are a lot of people going into the U.S. illegally from Canada, primarily from India. Going into the U.S. So yeah, it is for the northern states, I think they see it as a problem. So he does have a point there. It is a bit of a problem. Did your gym cost 100,000 to use gold bars as weights? No, go price out any hammer strength equipment, any York equipment. Just a lat pull down. That's the bar that you pull down. That's a York. That'll cost you $4,000 just for that one machine. The hammer strength machines are all 3,500 up to 6,500. I didn't buy home gym stuff. I bought commercial gym quality. Go to any gym store and start pricing out the machines. By the time you get everything for chest, shoulders, back, legs, biceps, triceps, all the curl bars, all the dumbbells, the whole set, and then you need your floor, right? You need the rubber mat floor on that. You'll get up there very quickly, very quickly. Which people do you usually listen to get market views or opinions? Some people I don't bother. I used to listen to Ed Yardini, but then I thought I could just take one of his videos and just put it on repeat because it's just permabull. No matter what's going on, permabull. So when somebody has the same story again and again and again, you stop listening to them because it's like coming up next, Ed Yardini. Let me guess, he's bullish. So there's no new information there, and he'll just find all the reasons why he's bullish, which are usually the same reasons why he's bullish no matter what's going on. Howard Marks, I like. Another one I've come to like is Jeffrey Gundlach. I never thought that I would, but I started listening to him. I go, okay, he's got some good data. The way he presents his data, I like that. Maybe I don't always agree with the conclusions he draws from the data, but I like the data that he presents because it gives me a chance to look at something I normally wouldn't look at. I say, okay, well, that's an interest. And you can hit pause and you can look at the chart because he puts it up on the screen for you to see. So he's a good source of interesting data, right? And then you can pick or choose to listen to him or not. But I find him very thoughtful in how he describes things. He's not parabolic. Parabolic is look at this, look at that. Everything is great. I see no reason why we're not going to 7,000 by tomorrow night. He's not parabolic. He's very thoughtful, and he speaks, I think, in an educated enough way that he's, it doesn't feel like he's selling you something. It feels like he's saying, look, here's the case that I see. I'm seeing this and I'm seeing this, and this is why I'm thinking this way and that. I kind of like what he does. So, and I think he does something weekly. So he's interesting. I like listening to him. Most of the time, I have Barron's, I have Wall Street Journal. I go through that every morning. You can get a lot out of that. You talk about game theory, complex theory, linear, nonlinear thinking. Like, can they recommend some topics? You just did recommend the topics. Google is fantastic. Same with YouTube. It's absolutely fantastic. Second largest search engine on the planet is YouTube. Google complexity theory and pay attention to who you're listening to, but you're going to find a lot of very qualified people that can talk about complexity theory, that talk about game theory. You've got a whole encyclopedia right behind your keyboard, so use this little thing and you've got the encyclopedia of the world at your fingertips. Your PhD thesis was Finding Fertile Time, a Temporal Investigation of Opportunity Using Patent Citation Data. Yes, Dr. Brent Meldrum. Well, Brent is my middle name. Mark is my first name. So now you know my middle name. Ha, 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 it's Brent. Brent's a good, strong name. Good one-syllable name, right? Mark, Brent. If I were raised in Boston, I'd be known as Marky Brenty. Marky Brenty. O'Meldrum. Yeah, Marky Brenty O'Meldrum, because I'd be, of course, Irish. With Powell and Trump on a collision course, is the pace of cuts the issue? Nope. I think Powell will do his thing the way he wants to do his thing. At least that's the way he's presented it. But I think his thing is downwards. I think he's on a path to cut rates because part of Trump said, I'm not going to get rid of Powell if he's doing the right thing. The right thing is lowering rates. Powell is lowering rates. Trump probably is not going to get rid of him. Probably is not going to renew him. God forbid the market drops 5, 6, 7%, Trump will blame Powell. God forbid economic data or job data doesn't come out shining and glowing. Trump will blame Powell. Trump has someone to blame now, right? He's got someone to blame now because everything good will be because of Trump's policies. Everything bad will be because Powell is not doing his job. This is what he's maneuvering for. So Powell is very useful to him right now as someone to blame. If everything works out, it's because Trump is that good. If it doesn't work out, it's because Powell is that bad and he's got to go. We got to find a way to fire him, folks. I hear a lot of people talking about it. No one's ever seen anything like this before. You can, it writes itself, right? Live stream like you did for Trump versus Harris, in which we can ask more things about life, social stuff, philosophy. Isn't that what I'm doing now? Tomorrow's my CFA exam. Wish me luck. Good luck. 2 questions. Do you still like CAD banks? I do. Are you increasing your position on long duration sub 90 TLT? Not until I see PPI tomorrow. PPI, I think, will be benign. And if TLT still sells off on PPI, then I would be a little cautious. But if TLT can find some kind of footing where the market then starts to reassess the inflation story, saying, it's not too bad. And I think it does that. It says, okay, it's not too bad. Oh, but Trump, tariffs, inflation, but wonderful economic growth. And the economy is going to be on fire. Everything's going to be, but inflation. See how those two things don't match up. I got a lot of puts sold on TLT that if I accepted everything, I'm already long, so 8,500 shares. I'm not closing my puts, and we're under 90 right now, which means I'll have another 25. I'll have another 25 put to me on Friday, which I will take. If I let everything be put to me, I probably have 30,000. But they're staggered all the way out to June. So I only worry about the front month, and I wondered, should I accept the front month? In taking that position, my average cost will be low 90s because of the premium I got on selling the puts. I can then begin to sell calls. I don't want to sell uncovered calls on TLT, but then I can begin to sell calls out each month to continue to risk manage that position. So I'm not too concerned about where the price is at this point. It's got a good enough dividend. I get paid every month, and I can double and even triple the dividend by using very low delta out of the money calls. I can produce a stream of cash flow off this that will be nice. So I'm not too concerned. If it can find a home for a while, I will begin to sell more puts under the price that I currently have. Yes, to answer your question, yes. Defined outcome ETF such as no, I don't look at. I can be very quick on that. What are your thoughts on the Treasury decreasing spending until inauguration day to sabotage the conspiracy theories? I'm just going to throw that one aside. You have a hard limit on the debt ceiling again. I think that got pushed to January. So the Treasury is going to have to find some way to extend out as much as it possibly can. Everyone is doing their job. Really, they are. Conspiracy theories are easy to concoct because you can always think that, okay, here's the outcome. Who benefits from this outcome? And maybe that was the plan all along, right? It usually isn't. It usually isn't. It's everyone is doing their job in the best way that they possibly can. The conspiracy theory, they're doing this to get this done and that done, which, to sabotage the S&P seems to lead to the level of conspiracy at that point, is just a laziness in trying to find out what is really going on. And usually it's kind of a boring explanation, but boring doesn't really sell. You need something like this. Yeah. Anytime you come across this where somebody says, "Oh, well, they're doing this to sabotage this or do this," not really, not really. Not that I'm saying that there aren't some people that are looking at sabotage things, but from an institution like the Treasury, not really. No. Is you in your estimation, how much more money you need to start an income-oriented portfolio utilizing apply level strategy and aiming for 4 or 5K monthly income? Well, 100,000 can get that done without 4 or 5K consistently a month. Yeah, I don't know that 100,000 would get that done. 200 once you get really good. I mean, 4K a month is 48 a year. On 200,000, that's about a 25% ROI. If you want to be consistent, you can have periods of time where you're doing 40, 50% ROI, and your account is really growing, but that is usually a combination of good luck and skill. You're going to get bad luck with your good luck. That's just the way the world works. It's not always just going to be good luck, and you're that good. Your true measure of skill is how well you do when faced with bad luck, right? Does it take you down, or can you find a way around it? Can you deal with the bad things that happen? Anybody can deal with the good stuff. It's riding a wave. You can ride a wave. You're good when the bad stuff doesn't take you down. I'd say 200 with experience. I don't know that I would say that your ability to generate a return is based on how much money you have. I'd say your ability to generate a return is based on how experienced you are and how disciplined you are. But aiming for 50% is not a wise thing to do because it forces you to take on risk you normally wouldn't take on. It forces you to take on risk that you can't survive if you get bad luck. So aiming for 20%, I think, is good. 25 is fairly good. If you got experience and you know what you're doing, 20% is not unrealistic. Tension between India and Canada, who will get hurt more economically? Well, I don't know that the tension is between India and Canada. I think the tension is between India and Trudeau. Let's just be straight about it. It's the kid. Get rid of the kid. I keep calling him a kid, and he's in his 50s. But in my mind, he's just still a kid because he's just such an idiot. A doofus. A doofus is a good word for him. Get rid of that guy. Bring in somebody else, and that relationship clears up, right? So I don't know that India hates Canada. I think Modi hates Trudeau. Bring it right down to that and get rid of Trudeau, and I think you'll be fine. Are you still short IWM? Yes, I am. And what a beautiful day it was today, right? Yes, I am. I have been selling 0-day to expiration calls and 0-day to expiration puts on that thing. It was beautiful. I saw IWM week today. I sold a 237 0-day 1-day put for tomorrow at $1 at 237 for 110 on half my position, and I equaled it with a 237 call that expired today for I got one. It was still at 238 and change when I sold it. I got 193. Boom, boom. I'm loving my short position on IWM. Loving my short position. Yes, I am still short IWM. If we assume one result from Mr. 47 is that labor falls by, say, 5%. Labor falls? What does that mean? What sort of impact, if any, would this have on home builders? Or to rephrase, how much would labor need to fall to affect XHB? Do you mean unemployment goes to 5%? Labor falls, or the labor force drops by 5%. Labor force is huge. 160,000. 5% would be 8 million. 8 million. That would be a lot. That's going to cost a lot to get rid of 8 million people. you need people to go hunting down 8 million people. Then you got to put them on buses and you got to get them somewhere, all without any pushback, right? I think it's foolhardy to start doing that. Here's my thinking of how it will play out. It will be less about deporting. I think whatever resources are available for deportation stay in place and they continue. But that any new effort is going to go in stopping them coming in. Let's stop them first, and then let's deport them. It would be like bailing the water out of your canoe at a rate equal to which the water is entering your canoe. You're not making any progress, and that is a waste of money with no solution in sight, right? What you have to do is you can have a policy where you pull people out of the water. You know, you're standing at the riverbed and you see people going by and you're pulling them out of the water. Or you could just send somebody upstream and stop the person that's pushing them in the water, right? That would be the best use of your money. I think the best use of the money is to secure the border, and I think that's what's going to be done first. Any mass deportation, I think, is a long time away. I think deportations continue at the rate that they're continuing at now, but I think if you stop the flow at the border and you keep migration, the deportations going at the same rate, that starts to lower the labor force. But deporting and in, you're not changing anything. So I think the effort will go to the border first, which could take a year, 2 years to really get that solution. I don't see it. Even though you've got a hardliner and a Nazi wannabe, Stephen Miller is those dead eyes. That is a Nazi wannabe. If he were born in Germany, he would have been probably a star Nazi. That guy is evil through and through. He is pure evil. When it comes to people that don't look like him, I mean, color wise, he's pure evil. No, I don't see. I would not focus on that. Although that's the story, right? The market is not pricing that in, but the bond market is, because saying, "Oh my God, wage inflation! You're going to get rid of how many million people?" And apparently, this is all going to happen on January 20th. Not going to happen. Not going to happen. I think we'll see that play out over time. If you expect more rate cuts are happening until end of 2025, why are you short IWM? Oh, well, it's the same thing as saying, you have a portfolio that has one factor and one factor only. You have no diversification, you have no hedge, right? It's a hedge. So there is, I'm not saying I'm long-term short IWM. I'm short-term short IWM. I'm long-term, long duration, short-term short IWM. And has it not been working out wonderful for me? TLT has been down over the last week, but since the pop-up that IWM has experienced after the election, with the amount of options, zero-date expiration options I've been selling, with the move down today, I am making more off my short on IWM than I'm losing on my long on TLT, in which case my portfolio value is actually creeping up slightly if I just bring it down to those two positions. So why? It's working out. Because in the short term, higher rates are going to crush IWM. So if I'm going to be long duration, long term, the path is probably pain for me in the short term. So if it's going to be pain for me in the short term, what's going to be joy for me in the short term? Short IWM. I don't plan on taking a 5-year short position in IWM. I think that would be silly. But right now, with the long end of the curve going up, with a lot of high yield debt that has to roll over in an index characterized by 35-40% of the companies unprofitable, no, no, this is not the condition for that index. I'm not short IJR, which is the S&P 600, which is profitable small cap. I wouldn't short that. But to get my short beta, I switched from being short S&P to being short IWM, and it is being working out. It's almost to the point of I'm going to have to, like a kid, tear myself away from the dessert table at some point because it's just too easy. It's just every day is big dollars. Every day is big dollars. I'm not going to want to give that up easily. I'm hoping this continues on for another 2 months that I can keep doing this. Where are we here? Why should I? If we assume one result from, okay, I already did that. What is your favorite lift to max out in the gym? My theme of gym questions previously, what is your favorite lift? What does that mean? Favorite lift to max out in the gym? You mean I'm going to answer this a couple ways. My favorite type of set, or my favorite type of exercise, where on this one I max out as much as I can. It used to be the squat, where I really looked forward to the squat because I'd always be making good gains on that, and I could do quite a bit. My top squat, I think 335, 345 was the top squat. And I go all the way down. I don't do one of these 3 inches down and back up. I go all the way down. I don't do that anymore. I don't lift heavy. I'll lift. I lift to a point where if I'm doing a set of 8 or 9, that's as heavy as I want to get. 12 to 15, that's the range I want to be in. And then I do multiple sets and I do paired sets. So, for example, with shoulder work, I'll do shoulder press followed by flies. So I double the set. I do one, then the next at the same time. So I forget the name of that. My brain likes to withhold words as you get older, right? So I do that, and then I will do the next exercise I do for shoulders is I do a lift, 2 barbells. You just lift them up, and then I do the shoulder shrugs with barbells in each hand, back to back. So I pair them that way, and I look for 12 to 15 sets. I can do 12 to 15 on. Once I get to doing 8 to 10, as you get older, you will learn that you risk injury much quicker. If I put weight on where I can only do a set of 3, I risk injury at that level. I don't want to risk injury at that level. So, and I'm not really going for anything more than just my own personal feeling good about myself. So, no one is building in the US. I don't understand that. Any thoughts on the run up in crypto and the pullback in gold? I already talked about that. What, if anything, could Trump do through crypto legislation, which could shock the economic system, like when Nixon took the US over? Well, his sons, I guess, have a crypto business, and he's got an interest in it now. So Trump will do what's right for Trump. And if firing Gary Gensler is right for Trump's crypto business, that's what he'll do. He's not doing it for the crypto crowd. He'll do what's right for him. Since he has a crypto business, he'll do what's right for him. He's smart in a way that he's going to hide in the middle of a crowd and then do things for the crowd, or make it look like he's doing things for the crowd, but he's hiding in the middle of the crowd. So it's not so obvious he's doing it just for him. He's doing it for the crowd, which will benefit him. I would look for him to probably fire Gary Gensler. I think he'll do what he said he would do there. And I think he will do what he can to remove regulation from the crypto space so that his business can make a lot of money. A lot of people are going to get hurt. A lot of scams are going to happen. A lot of crime is going to happen, but it won't matter if he's making money. That's you got to get into the head of the guy. You can like the guy, you can be a fan of the guy, but he's a leopard. Okay, he doesn't change the spots. He will do what's right for him. period. If you benefit, well, so be it. But if you don't, he doesn't give a shit. Same with Musk. He will do what's right for Trump. And if Musk loses on that, loyalty flows one way with Trump, to him. He owes you no loyalty back. Look what he did with Musk. Where did he put him? Off stage. He does not want that guy on the stage with him. Off stage. Why? Because this guy is a potential threat to the sun shining on me, to the cameras focused on me, to the glory on me. This guy's a threat. I need to push him aside. And if his actions with China threaten Tesla's presence in China, so be it. So be it. So be it. So be it. I agree with you. Trump uses tariffs as a bullying tactic. He seems nice, but in trade, he just gets unfair. Yeah. Should we short the market and long TLT? You should do what's right for you. Do not, I say this many times, do not copy me because you don't know what I'm doing during the day. I don't just take a position and say, oh, well, I'm getting screwed on that. I do many other things. If you're short, you have to be tactical. You cannot take a short and forget it position. You can go long and forget it, but you can't go short and forget it. You have to be tactical. And if you don't know how to be tactical, if you don't know what I'm doing from minute to minute, it may look like I'm in a bad position, but I'm not. If I'm in a bad position, I get out of it or I hedge out of it. I know how to do that. So I don't have many bad positions overall. I do have some. I mean, I've taken losses this year on some things, and some things I walk away from. But for the most part, I know how to deal with position. You need to do what's right for you. So I can't tell you short the market and long TLT. I don't think I'd short S&P 500 at this point. I'm more comfortable shorting IWM. But I could be wrong. You know, I could wake up tomorrow and something could happen and the story got even better and IWM could be up $10. That would present a problem. Big moves like that, based on the strategy that I'm using, big moves like that, that's a risk. That could happen. Long SQQQ and TLT and calls on it. Do you think Elon and Trump will have a fallout? It's inevitable. It is inevitable. They will not have a fallout if Elon learns his place, and his place is on the sidelines, praising Trump, not standing too tall, not being too important, not taking any credit. If he learns his place and gives all the glory to Trump, it could last a while. But if he starts getting, like he was being referred to as the Trump whisperer, that he was going to help guide Trump through this. He was starting to get some of the credit and some of the glory for what was about to come. No. Trump does not share the stage and he is not a kingmaker. No. He does not co-author papers with anyone. Even if his grad students wrote the whole thing, his name and his name only will be on that paper. He does not share authorship ever. Not even with his kids. Never. It's all him. And Musk is a real threat to that because Musk already has a reputation for getting things done, especially with SpaceX. I mean, he's really making great strides there. And he's probably got as big, if not bigger, an audience on X than Trump has on Truth Social. Bigger of an audience. That's not going to work for Trump. Do you see Trump tariffs affecting Canadian economy? He doesn't like Trudeau. So because Trudeau said some things about him, don't think for a moment Trump has forgotten any of that. Trump will crush Canada just to hurt Trudeau if he can. He's going to go after him. Period. And it won't matter if it hurts businesses in the US. He'll still go after him. Because it's Trudeau. It's Trudeau. I think we all know that, though. One Trump would cause more inflation, right? So Fed might not cut more. Maybe that is why TLT is falling. That's the belief now, is that Trump will cause inflation. I don't think so. And even if it does and the Fed doesn't move, Trump, bully, 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 name calling, name calling, name calling, career destroying, career destroying, career destroying. Trump. He will not stop. He will be relentless. So do you want that? Do you want that in your life? Do you want that guy in your life at all? No. So the path is lower. No matter what happens, the path is lower. I do believe that. Thoughts on hedging short-term vol on... okay, I'm going to pass on that. Would you say financial conditions are tight with crypto here? Okay, I'm going to pass on that. I don't know that crypto has anything to do with anything. A fool and their money are soon parted. I think most of the money going into crypto is foolish. It's just foolish money. But if I were around in Holland 400 years ago looking at all the tulips, I would have said, but what's the point of the tulips? Like, I don't get it. What's the point of the tulips? And that none of these ended well. What do you think will happen to oil prices? I think the path for oil prices is softer. A couple of weeks ago, you gave a bearish outlook. Would you agree with this? Yeah, I think the path for oil is softer before it firms up. What are your thoughts on Kashkari's statement? Current productivity trend continues and labor market remains strong. There's a chance that neutral rate will be higher. Well, I said that earlier. What you have to keep in mind is given a nominal rate, take a 10-year 4.5% yield. The yield is made up of three components. It's made up of a real interest rate, an inflation expectation, and a term premium. The riskier you perceive the debt to be, the higher the term premium. I think thinking of U.S. debt as risky is absolutely foolish, because if it's risky, everything else is super risky. It has to be, because no other place has the ability to print dollars. No other place has it. So everything has to be much riskier, but equity seems to have no equity premium right now, right? There's just no limit to it. So you have the real and the inflation component. If you have higher productivity, you have lower unit labor costs, you have lower inflation. Of that 4.5%, the real component is higher. The real component is called the neutral rate in, if you think about it in terms of the 10-year, or a neutral rate in terms of the economy. So let's say that you say, well, the neutral rate is 3%, not 2.5%. If you have no inflation, then your nominal interest rate will be 3.5%. That's what he's meaning. It does not mean that from here a neutral rate goes higher. It means given a level of rates, the real rate, the real component of it is higher. But yeah, if you have high productivity and low unit labor costs, of that nominal rate, the inflation expectation is much, much smaller. And if the inflation expectation is smaller, your term premium should be smaller, which means your real rate would be higher. What's your outlook on dollar strength in the Trump administration? I think the dollar is strong right now because the belief is that all the money in the world is going to come to the U.S. and no country will retaliate with tariffs, and every country will just let it happen, and everyone's going to be, and countries will encourage their companies to go in. No, that is a narrative that won't play out. It will be tit for tat on tariffs, tit for tat. And the U.S. does export. So there are trade-offs. Higher tariffs on imports. People pay a higher price. Maybe some imports drop. Your exports going to another country. That country says, oh, ho, ho, ho. tariff. Okay, so now some of your exports might not make it into the country, and there's the trade-off. No one's talking about, okay, if you put higher tariffs, somebody else will put higher tariffs, and some of your exporters will get hurt. Isn't it a trade-off? Isn't it a trade-off, right? So I don't see that problem being solved. I see that it would actually lead to a weaker dollar, not a stronger dollar. Looking at Chinese tech at all? Nope. Matt Gaetz until he picks. Yeah. Well, Matt Gaetz. The reason he's putting up Matt Gaetz is he's saying, well, what would my wish list be? My wish list would be to have absolute control of the Justice Department. Let's start with this guy. You probably won't get in there. But with anybody else, I'll have less control. With this guy, I'll get everything I want. Everything I want. I will own the Justice Department. I will be the head of the Justice Department. This guy's just going to be a joker in place there. Same with Secretary of State Rubio. It's just he's looking for people who will swear an allegiance to Trump before they swear an allegiance to the Constitution. That's what he wants. Gaetz probably with Republic, he's got to get confirmed. I don't even think that's not going to happen. That's not going to happen. It's not going to happen. And if it does, well, then I would probably say you need to probably short the U.S. across the board, because Trump will dedicate most of his time to slowly turning it into a dictatorship. Wants to fire all the generals and replace the generals with loyalists. That's the first step you need to take over, to put the Constitution aside and declare a complete dictatorship, is you need the army on your side, which means you need the generals on your side. I don't know if anybody can see it, but he's slowly tearing down all the checks and balances that normally go, and putting in loyalists, loyal to Trump, not constitutional loyalists, Trump loyalists. It is a dictatorship within the democracy. I think he's right. This was his last election, because there will be no elections going forward if he continues on. But I have faith in the other Republicans that are not just going to go along, but say, "Oh, this guy, come on." I mean, we can go along with a lot, but this guy, come on. Now, if they do confirm him, then then who knows where that country is going at that point. It will be renamed the United States of Trump, because America is not his name. He's got to have his name on it. There'll be a big gold sign, Trump, and the Statue of Liberty will be gone. It'll just be a Trump sign, and there'll be pictures of him everywhere and statues of him everywhere. He'll be called Dear Leader. You see where that's going? I mind resharing the pointers that to you put pressure on the Fed to lower rates. That guy, I recall interest expense is one of the issues. Well, there's the interest expense. You got to get that down. And just because of the sheer size of the debt, you got to get the interest expense down. You have to. And that's the one thing that you can control. There is Trump. There is Trump. He wants lower rates, and you know exactly what he's going to do to get lower rates. You know what he's like. And you have a backdrop of decent productivity with very low unit labor costs. So even if you have 4 to 5% wage growth, if you've got 3 to 4% labor productivity, you really only have a cost inflation of 1.5%, well within the 2%. So if you have high productivity, you can have high wage growth, and it causes no inflation. 4% wage growth with 4% productivity is zero inflation on unit costs. You have 5% productivity with 3% wage growth. It's deflationary, or corporate margins just increase, right? But with competition, you hope that somebody's going to pass on those savings and force prices to go lower. So I think you have a backdrop of deflation. We're all bullish on AI. The market, AI, oh, it's going to reduce costs across the board, but oh my God, inflation. Which one is it? Is it going to reduce costs across the board, or is it going to be inflationary? Which one is it? You can't have them both. But right now, it seems that anything that is inflationary, oh, blame the bond market. You got to let's punish the bond market. And any good news, well, that's all the equity stuff. But none of the bad news will show up in equities. To me, that doesn't make any sense. If we're saying AI is going to be a game changer and it's real and it's going to lower costs, then where's the inflation? Because that's massive productivity, which is deflationary. I'm not finding a good enough inflation argument within the context of complexity theory. The only way you can get to higher inflation is with linear thinking in a simple system, holding all else constant. Nothing gets held constant. Someone says Trump has increased tariffs. How do you know what will get affected? Well, you can look at, there is a, what is it called? It's called the U.S. International Trade in Goods and Services report that's put out by the BEA. And it lists the countries that you have trade surpluses with and trade deficits with. And then it goes into detail line item by line item, and it puts it into broad categories of capital goods, the different types of, if this is food, this is capital goods. So you can look at China and you could say, well, what are we importing from China? And you can see what's being imported. And then you can ask yourself, well, is it likely? So for example, Taiwan, we got a $7 billion deficit with Taiwan. But what do we get out of Taiwan? Semiconductors. You're going to put a tariff on semiconductors for U.S. companies who you want to win the technological war? You're going to put a tariff on. So you're going to say, okay, well, maybe not that. What about Canada? Well, we have a trade deficit with Canada. Okay, well, let's think of, well, hang on now. That is transmissions being made in Windsor being sent to Detroit. You're going to punish your own, like those aren't consumer goods. That's an input good. You're going to punish the car companies. You're going to make them pay more now. Well, okay, let's get a carve out for that. What about this country? Well, that's where all our bananas come from. Okay, well, maybe not food then. Let's not. But by the time you start going through the categories and say, no. Okay, what are we left with? Chinese cars. Well, okay, Chinese cars. But they already have an import duty on Chinese cars. By the time you go through it, you can see that, well, if you did put an import duty of 20% across the board, that's Taiwan as well. There's $7 billion in semiconductors coming in. What are you going to do with that? Right? That's 1 month. 1 month. So how many companies are you going to hurt? Right? All those NVIDIA chips coming into the US to build those data centers, 20% tariff across the board. And if he wants 60%, like he says, that is going to crush that whole sector. All those chip stocks got to go. All of those hyperscalers got to go. Price down, 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 down. Stock market is dropping. Trump cares about the stock market more than anything in the world. That's his measure of success, the stock market. It's going down. He'll reverse it very quickly because that's his measure of success is the stock market. So if you go through that release and you look at all the categories, you're not going to hurt yourself intentionally, right? Some of these would actually hurt yourself intentionally. You're not going to do that. So you're going to get carve-outs for a bunch of things. There's not a lot left. And you have to think about the sheer volume of imports and exports. We have a trade deficit every month of something like, the US, 90 billion a month. So you think, well, that's $1 trillion over the course of the year. But that's just the deficit. That's just the imports minus the exports. It's $1 trillion a year. Imports are something like 4 trillion a year. Exports are like 3 trillion a year. So you're going to hit $4 trillion of imports with a duty and expect that none of your exports, $3 trillion of exports. Think about what that means as a percentage of GDP now. $3 trillion of exports you're going to hit with you're going to take a hit down because you're going to get competitive response. You're going to get competitive response. And of the stuff coming in, that 4 trillion, you're going to do a carve out. You're going to do a carve out for the 100 billion coming from in the form of any kind of semiconductor. What about capital goods? There is equipment that is made in Germany that is simply not made in the U.S. You're going to put a tariff on that? You say, no, semiconductors have to set up here. We're gonna hit semiconductors. They got to set up plants here. Where are you going to get your lithography machines from? That's a capital good. Well, you're going to hit that with a 60% tariff too? Well, then why would a foundry ever set up here if they have to pay that much more for the equipment? They could never ever turn a profit. They're not going to set up here unless you have a carve out for that. Carve out for this, carve out for that, carve out for this, because there's trade-offs. It cannot just be 60% and we're going to get revenue. Our exports will be fine. Everything will be fine. Companies will set up here. No, they won't. It doesn't. It's not linear like that. Just take semiconductors. Hit Taiwan with 60%. You're going to crush a lot of companies in the US. Make them set up here. It's 2 years to set up a foundry. You got to import most of your equipment, 60% duties. Taiwan Semiconductor will say, we cannot turn a profit if we got to pay 60% more for our capital goods. Can't do it. We got to pay more for labor. We don't have the experienced labor pool we need. We got to pay 60% duty on all the capital goods coming in. There's no way we could do it. So we're not going to set up there, which means all you do net is destroy the AI data center growth rate in the US by doing that. Carve out. Okay, so you carve that out. What else are you going to carve out? Bananas? You're going to raise the price of food on bananas 60%? Well, okay, well, maybe not bananas. Well, okay, what about avocados? Okay, well, maybe not avocados coming out of Mexico. What about transmissions for Ford and GM? Okay, well, maybe not those either. And by the time you go through the list, you say, you know what? We're pretty efficient at what we're doing, aren't we? What are you going to do? Anything you hit China with, they will hit you with. You got 3 trillion of exports. 3 trillion of exports. So you got GDP, nominal GDP of 30 trillion. There's 10% of your economy that you're going to put up as a sacrificial lamb and say, go ahead and hit me. The market right now, I think, is acting like an immature little child and just not using common sense and logic to think through that you're going to get strategic response. I mean, it's going to happen. If there was an ETF that said strategic response, I would go long that. Instantly, I would go long that. But there isn't. The strategic response, if there is an escalation and a decrease in trade and a decrease in activity everywhere across the globe, which means you have to be short. Now, it could be that all of the retaliation is aimed towards the US, and Europe does very well, and India does very well, and Australia does very well, which means capital is not coming here. Why would you set up a semiconductor facility here if you got to pay a 60% import duty on your lithography machines that are already hundreds and hundreds of millions of dollars, right? Already hundreds of millions of dollars. Not going to happen. And that's just lithography. That's not all the other equipment that you need. Okay. You were much more pro-Trump a few weeks ago. No. I didn't say pro-Trump a few weeks ago. As far as winning the election, I can't see how he wouldn't win the election. And as far as a choice between Harris and Trump, it would be hard not to vote for Trump if Harris is the alternative. I'm not pro-Trump, but it was hard to see how he wasn't going to win. And when you do listen to him on one-on-one, he sounds a lot more reasonable than he sounds in public, a lot more reasonable. So it gives you a sense of comfort. But understand that Trump is going to be Trump. Like you can own a snake, but understand you own a snake. Don't start thinking that it's a puppy dog. You own a snake, and you can own a pit bull, but understand that you own a pit bull, right? You have to understand the nature of what you have. Trump is going to be Trump, who is a small, petty, vindictive little man. If he I'm not so much negative when I say what I'm saying. I'm not so much negative on Trump. I'm negative on the interpretation the market is putting on how great everything is going to be, that these tariffs are going to be a one-way thing that are beneficial to no one else but the US. The market is not considering the strategic response. I'm not saying that Trump is not considering the strategic response. I don't expect him to. But the market should be smart enough to say, this will be tit for tat, like it was last time. He hit China, China hit the US. How dare China hit us? Hit China again, China hit the US. Tit for tat, tit for tat. There is evidence in game theory that shows a tit for tat strategy is your optimal strategy to follow. That you repeat the very first step the other side made. If the other side increases a tariff on you, you increase a tariff on them. If they decrease the tariff on you, you decrease the tariff on them. Because that's how you train the other side, right? But tit for tat ends up being the most optimal strategy for anyone to follow in any strategic game like that. Simulations have been done on this. You can Google tit for tat games, game theory, tit for tat, and you'll find so many experiments that show that no matter how you structure your strategic response, no matter what algorithm you use, I forget what professor it was. It was a competition to try to figure out what the most, it was a great paper, and a bunch of game theorists were invited to provide a strategy for coming up with the most optimal solution. And it was one professor who just said tit for tat. He had the simplest strategy. He just said, just copy the first move, whatever it happens to be, and then copy the next move. So if they increase a tariff on you, do the same to them. If they decrease it, you do the same thing. And it ends up being the most optimal solution. It's what's going to happen. It's what's going to happen. My words right now are not that I'm blaming Trump for all this. I'm looking at the market saying, how stupid can you be that you're simply just working in one paradigm in general equilibrium economics without considering any kind of competitive response whatsoever? How stupid are you? Now, the other side of that argument is that everyone knows that. Everyone knows that. But the market is full of smart people and stupid people. So the smart people are saying, let's just let the stupid people do what they want to do, because if we're going to short this market, we want to short it much higher. So maybe the smart people are just on strike for now, letting the stupid people think linearly and pushing the narrative up to a point where, okay, now let's go in. Now let's take care of this. It could be that the smart people are just not engaging, saying, let the stupid people do what the stupid people do. You can't have a market full of smart people. There are stupid people in the market. There are some really stupid people in the market, and maybe it's the stupid people. All right. So I like the explanation you gave in your positions video on utilities. Do you think Trump's stance against renewables is also impacting or will impact utility stocks? I think companies will do what's right for companies to do. Does it help to have government spending to help with the renewable side? It certainly does. It certainly does. But I think companies will do what's right for companies to do. If it makes sense to do solar, they'll do solar. If it makes sense to do wind, they'll do wind. It always helps when there is government money for these sorts of things, but you don't necessarily need them. Now, I want you to think very clearly about this for a minute. Here is where we get into a complex situation. The belief is, well, these solar stocks are going down because he's going to pull all the funding for this. And what? These companies are going to continue to employ the same people they've continued to employ? Or will they start to have to lay off people, and some incomes will disappear in the economy? That's not being factored in. Oh, they're selling off because of this and that. Well, if it's because of this and that, won't a lot of companies, smaller solar companies, go out of business? Larger companies downsize, downscale. Won't there be some loss of jobs for this? Won't that be a negative for the economy? Oh, that belongs to the bond market. They're making this little division here. If you are negative on all the renewable energy companies, because there won't be government money available for that. Like I said before, every dollar a government spends is somebody else's revenue or income. So you're taking revenue and income out of the economy, which means you're going to hurt jobs, you're going to hurt GDP. It can't all be good news, right? There is a trade-off in this, that if you follow it to its conclusion, if you do the linear thinking, you would get to that conclusion that, well, that industry will end up being much smaller because it won't have government money, which means the GDP it contributes will be much smaller. So those employees will be gone. National income will be smaller. Aggregate demand will be a little bit lower because of this. You got to think of the trade-offs. But companies will do what companies need to do. They'll still do the right thing within the environment that they have. Lower interest rates will do a lot to help that, to sort of offset the negativity there. How long can crypto stay inflated? You tell me. Until all the stupid people have spent their money. When you start hearing people, talking about it on the street, talking about it in the waiting room, talking about it all over, when you hear it all over, it's like, well, everybody's in. Everybody's in on it. Fellow cap REIT investor, we need your help to put a floor on that thing. Why? I don't want a floor on that thing. I want 42, 41, 40, 39. I want it lower. I was watching it today, 44.70, 44.80. I think, come on, low 44s. Let me sell some 43 puts on this thing. I'm okay. I'm not, the thing is, you don't lose money until you sell it, period. So all you have is a position that's decreasing in value. You can't outsource apartment buildings. Apartment buildings are not going away. You get a dividend every month. It has options. Who cares what the price is today? Who really cares? What I want is I want a big position, but not here. I want to see 42, 41, 40, 39. I'm cheering for it to go down. I currently have somewhere around, well, I got 20, I think I had some put to me this week because I have options that expire. I think I got 23,800 shares. I'd like to get to 100,000, but I want it down. I cheer, even though I've got, every dollar down is going to cost me 23,000. I want it lower. I don't want to put a floor on this thing. I want to steal it. I want to completely outright steal this bloody thing. I don't want a floor on it. I want it. So no, I'm not going to. I don't think I have the power anyways to put a floor on anything. But if you asked me, would you like to see $5 higher or $5 lower? I'd say, please, $5 lower first. I'd rather go $5 lower before it goes $5 higher. I want to steal this thing. So yeah, I am looking for much lower if I can get it. On a wider scope, do you think ETFs that are formed with the idea of taking a product to private credit and wrapping it up to make it attainable for retail investors is dangerous to the overall market? Well, no. I mean, an ETF is simply just a pass-through security, right? So it doesn't increase the amount that's out there. It simply just redistributes to who can get access to it. But you still have people managing the private credit portfolio. So I, as an ETF, would hold, I guess, shares of a private credit fund, or maybe even some bonds that were sold against loans, or it's backed by private credit loans. I don't know, but I get exposure to it somehow. It's just allowing me access to an asset class that I wouldn't normally have access to. So I don't know that it would be. Now, if you took these and then levered them up 4 or 5 times, being that they're already levered loans to begin with, and you didn't understand how much leverage you're building into the system, there's where I would say that there's a problem. So if the ETF is then adding more leverage to what is already leveraged, that's a big problem. Yeah, that would be a problem. I've noticed that cap REIT seems to be more sensitive to U.S. long rates rather than Canadian. I don't know that I would say that. I don't know that I would. No, I don't agree with that. I think it may look, well, right now that cap REIT is more sensitive, but I think it has more to do with changes in Canada's immigration numbers being brought down lower at the same time that rates are coming down, making it look more sensitive to changes in Canadian rates, which might make it look like it's sensitive to US rates because they're more volatile. But I think it's just, it is just Canadian thinking. Now, again, if you think the US is serious and they're going to secure the Canadian border to stop the flow of migrants, which there's no lying about that. There are people who are coming into Canada to get into the US. That does happen. That is a thing, a pretty big thing. So if you think that they're going to shut that down, those people got to live somewhere in Canada. Wouldn't that just be a boost to the REITs? Again, just not thinking things through, not thinking about, well, if you do this, what are the other things that are going to happen? It just seems to be one-way thinking. You talked about not having a yes men or loyalists, but can you say in the whole presidential history who did not have that? There is a difference between administrations. All administrations want clear sailing so that they can get everything through that they want to get through. Every administration wants that. You can agree to that. But I don't know if any past president has ever said, you will swear an allegiance to me above the Constitution, where maybe not in those words, but has tested the person to determine whether or not you would ignore your duty to the country and the Constitution and do what I want you to do no matter what. I don't think any other president has ever really gone that far or has attempted to tear down the institutions that go that far. This is while it may look like the same, it's very different in kind. He means to be number one in terms of allegiance. It's not a matter of, I'm the head of the party. I'd like to get these things done. Are you somebody that I can work with? It is, I'm going to tell you what I want done and you're going to do it. Do you want the job? And if he doesn't want a thinker, he doesn't want an independent thinker who is going to show allegiance to the Constitution and do the right thing and not follow all the orders, which is probably why he didn't want Mike Pompeo back, because they had different ideas and, he's going to express his opinions. I don't want you expressing your opinions. I want you saying, yes, sir, no, sir, 3 bags full, sir. I want you just to carry out my orders. This is what he's doing. He wants people in place who are very aligned with him and that will, if any disagreement or anything happens, much like a CEO says, these are my orders and your job is to carry it out. That's sort of what he's looking for. Don't you think you will have problems in exercising your power if you don't have loyalists? But that is the point of checks and balances, right? That is the very point of checks and balances, is to make sure that you don't have unfettered ability to exercise your power. Power corrupts. Absolute power corrupts absolutely, right? The idea of the American system, the way it was designed, was to have these checks and balances in place. But if you remove them all by saying you will not be loyal to the Constitution above me first, always me first, or I'll fire you, and I'll destroy your reputation. You'll never work again, blah, blah, blah. That is a different thing altogether. This is exactly why you want checks and balances, so you don't have unfettered ability to exercise your power. What do you think of Chegg? Well, I think it's challenged. If you can use ChatGPT to find solutions to your homework, because what was Chegg to begin with? It was a student cheating platform. Period. Let's say it wasn't, I need a tutor, I'm going to go to Chegg. This is the homework assignment I have, I'm going to just buy it. That's what Chegg was for. Well, if ChatGPT can do it, and now you may say, yeah, but what if a ChatGPT is wrong? Do you really think the students who were buying their solutions on Chegg were checking to see if they were right or just submitting them anyways? Do you really think they care if it's right or wrong? They only care if it's done. I've been a professor for a long time. Your C students and your D students don't really care if it's right. They care if it's done. They'll throw garbage at you just in their mind. Okay, it's done. I've handed it in. They don't care what they put their name to. They don't care what they put their name to. That's why they're D students, and you'll always have D students. If they can get it for free, they'll get it for free. What's the point of paying Chegg to cheat when I could just get it free from ChatGPT and cheat, right? So I don't know, unless Chegg finds some value added function that ChatGPT can't replicate. I think it's just a matter of time before they're gone. On top of that, think about the sheer amount of real resources wasted to mine crypto. Well, why do you not compare growth in government deficit to growth in GDP and instead use deficit as a percentage of GDP? Why would I compare the growth in the government deficit to the growth in GDP? What is that telling me? What would that tell me? Right? What would that tell me? Let's say that I have a deficit of $1, and now I have a deficit of $2. 100% growth in the deficit, and I would compare that to 3% GDP growth. And what conclusion would I reach? What conclusion would I reach from that? I mean, you'd look at it, you go, well, $1 versus $2. Yeah, it's 100% growth, but I mean, so you're taking something that's small, really, a deficit, versus something that's big, and you're looking at a percentage change. The small thing would look like it's got a huge percentage change compared to any percentage change you get on GDP. So you have to normalize it somehow. So dividing it by GDP, looking at the deficit as a percentage of GDP, is one way of normalizing it, so you can have some metric that makes sense. But as I just gave you an example of 100% growth in the deficit, what would you compare that to, and what information would you pull out of that would make any sense? Any thoughts on the space travel market? Well, it's early. I don't think you're going to have trips to the moon. Like you have trips to Cancun anytime soon. You may take people to the edge of space and back, but that's a billionaire's game right now, which good for them. They're paying for the advancement of the technology. You need some, if you had no rich people, you'd have no space travel, because you'd have no one that could afford the first few trips. So we should say, oh, good for them. They're paving the way to make it easier for someone like me to pay maybe $10,000 for a trip up to space. But it's early. But again, in these nascent nascent industries, the investment potential is not based on where you are now. It's based on the future. You got to keep people looking at the future. You got to keep them focused on the horizon and what's lying ahead and what the potential could be and what this and what that, blah, 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 blah. If I can get people to the edge of space, maybe I can get tons and tons of steel to the end of space. And maybe we can start building an intergalactic space rockets in space so that you don't need the sheer amount of gasoline or the sheer amount of fuel and weight you need to break the surly bonds of heaven, or what are the surly bonds of earth, as it's referred to. That if you build it out there in space, well, maybe that's where it goes first. I don't know, but if you can get people up there and back, that's easier and more profitable. At least they can pay money than flying 5 tons of steel up and seeing if you can get the spaceship back. How do you see European economic future? Well, there again, this is where we get linear thinking. Apparently, Trump is going to solve all the wars on the face of the earth on day one. You solve the Ukraine-Russian war, wouldn't Europe recover nicely? But somehow America will still be the center of everything, and Europe's not going to see. Again, you have to think, well, okay, so you solve that, then Europe benefits, right? Wouldn't Europe benefit, and wouldn't Ukraine or whatever's left over start being productive and start selling? Heck, they were big in equipment, they were big in auto parts, they were big in grains. Wouldn't that be back on the world market at that point? Wouldn't Europe be a great place to be at that point? Wouldn't it start to say, okay, well, look, supply chains start getting better, the rebuilding, everything? But apparently, no. Apparently, all the rebuilding will be done in the U.S. because I guess you'll take all the broken buildings and you'll import them into the U.S. before the tariffs, and you'll say, you got to build your building. Being ridiculous, mind you, but the market is being ridiculous, so I have license to be ridiculous as well. Again, think about it. If you are going to solve that war, you take a big impediment out of Europe's growth. If you think, no, we're not going to do that, then you're not going to solve the war. One of the two things are going to happen. So you can't just have this linear thinking. So if we believe Trump will create world peace on day one, because of course he's godlike now, then I would say long Europe. Are you looking at any onshoring themes at the moment? No, not really, because I don't think it's going to work out the way the market thinks it is. That tariffs will be one-sided and no one will retaliate because everyone wants access to the American market. I don't think it's going to be that at all. I think it'll be retaliatory. It'll be tit for tat. And it will not be a giant sucking sound around the world as money flows into the U.S. So I don't know that there is an onshoring thing that makes sense. You're a company. You're thinking about setting up another plant. You want to set it up in Mexico. You think that's the best place for me to be is in Mexico. But this guy's going to mess me up with his tariffs if I put it in Mexico. But he is only here for 4 years. So why don't we just put the plant expansion on hold for now? Why would I risk building it here and investing all that money in a high cost regime when I already can supply the domestic market, which means I'm going to have to export these vehicles. If I export them because of his trade war, now I got a trade war, tit for tat. Now I can't export it. And what if I did build all of this and in 4 years you get a Democratic administration who says, okay, all tariffs are gone? It's like, fuck, I should have put it in Mexico. I should have waited. God damn it. Right? If I were the CEO of one of the car companies and I was thinking about building a plant in Mexico, I'd say, okay, maybe let's put it on hold, but I'm certainly not going to start scouting out a place in Texas and saying, well, let's build it in Texas instead. No. The economics made sense in Mexico. They don't make sense in Texas. Otherwise, I would have built one in Texas if the economics made sense. And if we get tariffs, it's one administration. It's one administration. I may as well wait and see what happens. No, I don't think that you're going to have all of these billions of dollars rushing to build in the US unless it becomes clear in the first year that Trump has the military, he's disbanded the Constitution, appointed himself as a dictator, and nothing else changes. And capitalism capitalism goes on as it normally did, and nobody fights back, and there's no civil war or no anything, and it's not going to work that way. I guarantee you, most of the investment that Trump is thinking he's going to get will just be on hold for 4 years to see how permanent this is and where it's going. It will be on hold for 4 years. You're not going to spend, $15 billion in building a plant on a 4-year if. You're not going to do it. It'll take you 2 years to build it anyways. You're not going to do it. Not going to happen. Not going to happen. Let's see. Have you taken a look at Texas Pacific Land Corporation? No. I guess the use case for crypto is to replace currencies and ideally connect with gold, not just a bro thing, just trying to pose the other. I tend to take the crowd as well. So let's say that you didn't have a currency. Let's say there was no currency. Crypto is a great solution for that problem, but we do have currencies. Now you say, but it can replace the currency you already have. So what you're saying is the thing I have that's working just fine, I'm going to throw out to get something else that may or may not work fine. I'll tell you what, you keep doing what you're doing. And when I see that what I'm doing is not working out for me, maybe I'll think about it. Money is a form of exchange. I get it. I want something you have. I give you this money. You give me the thing you have. I walk around with US dollars. I can get anything I want, anywhere I want, in almost any country I want. But I can't pay the gas station in crypto. They don't take it. I can't get my food in crypto. They just don't take it. Most of the clothing stores, I've seen no clothing store that says we now take crypto. So I have crypto and I'm looking around going, well, nobody wants this shit. Well, I'm going to go buy this dealership is saying, they'll sell me a truck for $100,000. Okay, I'm going to go. I get there. Here you go. Oh, your crypto's only worth $95,000 today. Shit. Now I got to come up with another $95,000. I get home. No, it's worth 102. I go back. It's worth 97. Shit. You see what I'm getting at? It's nowhere near a solution. Now, crypto is not the end. Crypto was the means, but it's being treated as the end. The end was the blockchain, which is an elegant solution, again, for a problem very few people have, which is to have a distributed ledger, because you don't want one entity having so much control over whatever information you have or whatever product or contract you have distributed, so that nobody really has control over it. But you need trust. How do you get trust in something like that? You build in zero trust, which is what the blockchain is. And you have other people verify the transactions. How are you going to get them to do that? Well, then you have this crypto. If you have a blockchain, you need a crypto. The crypto is the means by which the blockchain operates, but not anymore. It's the who cares about the blockchain? Have you traded the crypto? But don't you see that's backwards, right? It's simply just backwards. It would be like if there was a market for hours. Right now, we earn money by selling our hours. We go to a job, we sell them 8 hours of our life, and we get some money. But imagine that it went backwards and you could own hours, right? So now we're trading hours. I got 87 hours. How much is an hour now? I got this many hours. I got that many hours. Well, great, but what function do those hours serve? You see what I mean? You've divorced the hours from the labor. So now you're just trading the hours, but not the labor. So I say, okay, I'm buying and selling all these hours, but I still have no labor. That was the point. I'll pay for hours if I get labor in return. The point of crypto was you'll get this crypto if you process these transactions on this blockchain that solves this problem. But the only transactions being executed on most blockchains is the trading of the crypto itself, much like a marketplace where we trade hours but no labor. That's crypto. That's where we are right now. Unless you have a killer use case, all of this is just a bunch of bros gambling. If this didn't exist, that money would be in Vegas or in the strip club. It wouldn't be in this. It wouldn't be in this. But I guess this is better than anything else. I mean, some people are making money, some people are losing money. It does create employment. It is an industry. It does add to GDP. So I guess, but so does strip bars. So does prostitution. So does drugs. So does Vegas add to GDP. So I take that back. Gambling is an industry that creates employment. It creates investment. It has buildings. It has destinations. It creates airports. Look what it did to Vegas, a place in the desert. So yeah, I take that back. Maybe crypto does that in the most inefficient way, and maybe just building a casino is more efficient and better for GDP. If government grants subsidies to export industries, isn't the taxpayer in that country funding it? No, if the government grants, you're okay. What you're saying is, if China grants a subsidy to their exporters to export things, yes, your people are paying for it. Yes. But if the US puts tariffs on stuff coming in from China, Americans are paying for it. You cannot tax another country's citizens, no matter how you think it through. You can't tax another country's citizens. There's nothing the US can do to tax a Canadian citizen. Oh, we'll put tariffs on your goods coming in. It's your citizens that pay the price, not mine. I mean, I don't have to, I may lose sales, but that's not a tax. If I continue to sell into your country because I sell bananas and you got to have bananas, it's not going to affect anything. I sell semiconductors and you got to have semiconductors. I'm not going to be, you're simply taxing your own people. Every policy a government puts in place is a burden on its own people. There's nothing it can do where it hurts another country but doesn't hurt itself, because if that's the case, there will be retaliation. If I was to start a business and use cost plus pricing, but end up pricing my products way lower than competition and my competitors retaliate and price me out, what would be my next move? Well, pricing strategy is only one thing. There are three pillars to that leg, right? There is price, quality, and service, and you can only have two of them. I don't believe in value pricing. I don't believe in pricing something based on the value you get out of it, and then me using an algorithm to find out how much it's worth to you, so that you'll pay more than the person beside you because you've got the bigger problem. I don't believe in that. I believe in sort of the Home Depot model or the Costco model, where you walk in, there's a price on the shelf, and every single person, no matter what walk of life they're from, pays that same price, period. I don't like this, oh, well, you pay this price and you pay that and you pay this because based on your history and everything we know, you got more. Fucking hate that. I hate that. So the pricing that I like is the same for everyone, no matter who. And it represents my costs plus a markup. That's one leg. I have another leg. I can either have excellent service, maybe my product isn't that great, or I can have a great product and maybe the service, you give up on some of the service. If you have a really great product at an attractive price, it will be hard for your competition to match you. Look at Costco. Costco can even charge you $60 to walk in the door, $65 just to walk in the door. But an amazing loyal customer base. maximum markup of 14 to 15%, that's cost plus. That's not them pricing something based on the value they think you're going to get. That is, it cost us this. The most we're going to go is 14, 15%. We put it on the shelf. There it is. That's it. And they take a very narrow product categories. They'll have one or two different types of things, and that's it. The most popular things and the most popular packaging, and that's it. But as far as service goes, I mean, they don't have people walking around saying, "Can I help you find something today?" That's not going to happen in a Costco. They have people doing their thing. You can always stop and say, "Where can I find this? Where can I find that?" But that's it. If you're looking at the clothes section, no one's going to walk over and say, "Would you like to try that on? What else can I show you today?" That doesn't exist. So you don't have any of that inside the store, but you have great pricing and great products. So if you are going to follow cost price, you then have to ask, what is the second pillar of that stool? Am I going to have this really great service that no one can match, or this really great product? The price is only one thing. That's only one part of it. It's not always just your one strategy. Is religion a hindrance to democracy? No. Yes. Whatever you can say about it, you can say no and you can say yes. You can say yes, because people are voting in a very theocratic sense, and especially if you're atheist, you would say, God wants me to vote for Trump. You got to be freaking kidding me. God put Trump here statements like that are just stupid. If your vote is because your religion or your God or your Bible tells you to, then that's stupid and it's uninformed. But without a religion, what the hell would people be thinking, right? Vladimir Lenin, referred to religion as the opium of the masses. If you want to keep them docile, if you need a population that stays in line, you don't want them thinking too clearly about the state of affairs or reality, because you don't know what they would think of. Religion is a great thing for that. It medicates the masses. It keeps them docile. It is the opium of the masses. Because if you didn't have religion, what would replace it? What ideologies would replace it? What body of morality or ethics would replace it? How would you keep people from acting all sorts of different ways unless you had a religion that kept them on a certain path? Whether you agreed with it or not, at least they're on a certain path, that they have a fear in a God, hence they will behave in a society the way I want, that maybe laws could not get me there all on their own. If you didn't have that, what would you have, right? And for this, you're sort of reminded of Hamlet's soliloquy when he says, wouldn't it be nice to have it all over and to sleep, to dream perchance, right? End my life, enter the long sleep, to dream perchance, meaning the next life. And then he stops and he says, that's the rub though, for what dreams may come. And what he's saying is that, how do I know that would be any better? What if that's even actually worse? So you have religion, but how do you know that the lack of religion would be any better? It might actually be worse. You might have people that are lost. Religion at least gives them meaning. You might have people that are lost and unanchored to a moral system. That could actually end up being far worse than having religion. So is it a threat to democracy, or is it the glue that holds something together? You can make the argument both ways, right? I am not an anti-theist. I'm an atheist, but I'm not an anti-theist. In other words, I feel no reason to convince you there is no God. I feel no reason to destroy religions. Just do what you do, and I'll do what I do. And I won't think less of you for believing what you believe, and I expect the same that you don't expect less than me. We just believe different things. And I think it was Ricky Gervais that kind of summed it up nicely. The difference between an atheist and a theist is one God. I mean, there was a time when humans believed in a whole bunch of gods, and there are some religions where they believe in a whole bunch of gods. Well, the difference between you and I is we're just one God apart. I just believe in one God less than you. That's all. So, I thought that was a nice sort of explanation of why we're not that different. When looking at hedge positions, the cash spent on hedging as positions move up and up seem to harm returns. That's if you take away the left part of the return distribution, it costs you some of the right part of the distribution. Yes. Is there something I'm missing when I think the market is due SPY booms? Well, yeah, you're probably just not reading it right, or you're buying protection, which is sort of an inefficient way to buy protection, and you're probably buying the wrong protection. You're probably buying high delta protection, short term, very high delta protection, which is not what you want to do. Markets don't fall all the way to zero. So let's say the market's at 6,000 and you expect over the next 2 months the market is going to have a 10% correction. So you buy puts. But why are you buying 6,000 points of protection? You see what I'm getting at? Why would you buy 6,000 points of protection? And why are you worried about buying it out 2 months in time? Well, it's going to fall 10% over the next 2 months. Yeah, but any delta will take care of that. You can buy puts a year out from now, and it will take care of that because it will respond to the delta. But you don't need 6,000 points of protection. You only need 600 points of protection. So you're buying the 6,000, selling the 5,400, right? Now, you don't have to buy them for the same month. You don't have to do it for the same month. You could say, well, I'm going to buy the January, because we're in November. I'm going to buy the January put at the money. But I'm going to go out 6 more months and I'm going to sell the 5,400 put for protection to pay for the call. I'll buy the put and I'll sell the 5,400. I'll go out 6 months and I'll sell that one because I'll get more money for it. And I don't mind selling that put to pay for this call, because in the short term, this call will pay off, but that put will barely move. And if we are at that price in 6 months, I'd be a buyer of the market there anyways. You don't need 6,000 points of downside protection. So you're probably just buying protection the wrong way. You're probably paying for protection. What you want to do is get somebody else to pay for your protection. So once you decide I'm going to buy this put, the next question is, great, who's going to pay for it? Who is going to pay for this stuff? Some funds will say, well, market's at 6,000. I'm going to buy the put at 6,000. And I don't see it getting to 6,600. So I'm going to sell a 6,600 call and sell a 5,400 put. But they'll find other options at other strikes to help pay for their protection. So you may be doing it inefficiently by paying for all of your protection yourself instead of saying, this is the protection I need. Who am I going to get to pay for it? Always look for somebody else to pay for your protection. There you go. Correlation of money supply with the expansion of the PE ratio. No, I have not. My argument is that if money supply is expanding, shouldn't it eventually end up in the markets? What if it ends up in real assets? What if the money supply expands to meet a growth in capital investment in real assets? Let's say that you do get a bunch of money coming into the US to start building facilities. Well, those are real assets. If you do get money coming in, you're going to have to sell them US dollars. You're going to have to keep coming up with US dollars. You'll have to expand the money supply at some point, but that money is going into real assets now and not going into equity. So I would say that, is there a correlation with the increase in the money supply and the increase in the market capitalization of tradable assets? I'm sure there is. Is it a one-to-one? No, I don't think it is. I don't think it's that clean and efficient. I think there's a correlation to the increase in money supply and the increase in investment, whether it be financial assets or real assets. I think that yeah, sure, it's going to create something there. Tesla having a halo effect due to significant Musk events like catching of the rocket. Yeah, probably. There's something there. I'm not a Trumper, but I think your hatred for, I don't hate Trump, for Trump is clouding you. I don't hate Trump. Much like I don't hate a grizzly bear, but I don't want to be in front of a grizzly bear. Do you see what I'm getting at? I don't want a grizzly bear in my house. I don't want it anywhere near me, but I don't hate grizzly bears. I don't hate spiders. I don't hate poisonous spiders, but I don't want to be around them. Sorry, that was stupid. That was dumb. It makes me sound ignorant. I said poisonous. There are no poisonous spiders. There are venomous spiders. Let me take that back for any of the biology people out there saying, oh my God, did he just say a poisonous spider? There are no poisonous spiders. There are no poisonous snakes. They are venomous. There's a difference. They're not poisonous. They're venomous. I don't want to be around a venomous spider, but I don't hate them. I don't say, oh God, I hate these spiders. I just don't want to be around them. I don't want to be around them. I don't hate Trump. I just know what he is. And I wouldn't want him in my life. I wouldn't want him anywhere near me. But you don't have to hate someone to recognize their true nature, right? It would be like saying, do you hate molten steel? And you say, no. I say, well, if you ever put your hand in molten steel, it'll come right off. It can really hurt you. Shouldn't you hate molten steel? It's like, well, no, I understand the character of molten steel, and I'm not going to go stick my hand in molten steel. I know if you pour molten steel on certain things, you'll melt a whole bunch of stuff and cause all sorts of trouble. I get the nature of molten steel, but I don't hate molten steel because it has that nature. I just understand the nature of molten steel. I understand the nature of the man. I don't hate him. I would not choose to act like him. I would not choose to be him. And I would not choose to have his attention directed towards me, because who the hell wants that in their life? I don't want this guy anywhere near me, right? But I don't hate the guy. I just understand the nature of the guy. There is a difference. You can understand the nature of something disagreeable without hating the thing that's disagreeable. You just say, I don't hate it. I just recognize it. I don't hate the snake, but I'm not getting anywhere near that, right? I saw that estimates on next month's Fed is 50-50 at zero cuts versus 25. Is it there now? Even with ZQ today, I saw the SOFR futures move up, implying more rate cuts. I don't think that's true. While I have this open, let me just hit F. Do I have it on here? No. Let me open another window here. And I am going to check that. I don't think it's 50-50. But I guess it depends on when you looked. Not now. F. There it is. Fed Watch Tool. Go to CME. And let's have a look at it. It is 25-point cuts. Got an 83%, 82.8% probability. No cut is 17.2, which is up from a week ago. In fact, 1 day ago, maybe you were looking yesterday. Yesterday was 58.7% and versus 41.3. Today is 82.8 versus 17.2. Okay, well, maybe you were looking at yesterday. What are these analysts seeing that would think the Fed will not cut? I have no freaking clue. Especially when Powell in his press conference all but said, we're cutting, and inflation's not a problem. He all but said those words. Well, not all but. He said those words. So I don't know what the market is thinking. Remember you shorted SPY during the election since the market had rallied significantly. Did you manage to exit before incurring any losses? No. No, I closed my short SPY and moved it all over to IWM because I was watching the two and I noticed that IWM was not responding the same way as SPY. It has a higher beta, which means I can have a lower dollar amount and still get the same dollar beta out of a short IWM. So I lowered my capital, and the short on IWM is paying much more than if I had kept my short on SPY. Here's a rule in the market. You don't have to make money the same way you lose money. I saw an opportunity to switch from SPY to IWM. The thing is, I didn't see myself as being short S&P. I saw myself as being short beta. I don't care where I get my beta from. IWM to me seemed like a better beta to be short than S&P. So I switched to IWM. Will Trump's plan to renegotiate USMC hurt the Mexican peso? Not only that, you had Doug Ford, which is the premier of Ontario, Doug Ford, saying that Mexico should just be kicked out altogether. What do we need Mexico for? Kick them out altogether. So I don't know. You got 2 years to get that done. Beats me. That's it's got a lot more risk in it right now, especially after that statement. You know, even though Doug Ford is not the negotiator, by the time you negotiate this, it will be the Conservative Party that is running Canada, not the Liberals. Yeah, there's growing risk there, I would say. Growing risk. I had haircut scheduled at 2 p.m. in the Dominican. Upon arrival, there was no hairdresser, but her friend was watching the salon. She said the hairdresser left for lunch. We'll be back in 3 hours. That's it. That's it. Is time is more of a, is not a, you know, it's not a hard number on the clock. It's a number that you say just to end the conversation. I'll be there at 3. And maybe you will, maybe you won't. Who knows? How do you say grounded and disciplined? Age has a lot to do with it. As you get older, you become far more of a realist. Not to say that idealism fades away, but you do become far more of a realist. And you're not so taken away by idealism that you start thinking about, oh, this is going to be great, and this and this and this. Is like, hang on a second. I know people. You know, things aren't going to happen the way we think they are. And as you age, as you get more experience in life, you become more grounded. Educating younger generation seems like you're calling, but it's just from observing from time to time when I catch you live. Can you talk about a previous time you made a massive bet and it went against you, like what was happening now? What was it and how did it play out in the end? You know, the thing is, every year, you can take any professional investor and ask them that question, and they'll answer by saying, "What year? What year do you want me to talk about?" If you have no losses, if you have no big losses, you're not taking enough risk. If you have nothing in your past that stands out saying, "Man, I was wrong on that," it means you're not taking enough risk. You're probably underperforming overall. Everybody has losses. Everybody. It's natural. Everybody does. That's why I get a kick out of some people who want to, you know, make themselves feel better by making fun of you because you had a position that didn't work out like they didn't, right? Everybody does. And it is bad form to bring it up. You know, if somebody has a position that's moving against them, you have empathy. You say, "Hey, I know what that feels like. I know exactly what that feels like." It's the kids. Ha 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 ha. How's that working out? I mean, right away, I can tell. You know, there's some inexperience there. What's a big one? Probably 2022, beginning of rate hikes. GM started dropping from the 60s, mid 50s, 50s, 45s. And I thought, okay, this is overdone. And I kept buying more, saying, I'm not wrong. I'm not wrong. Dropped to 40, dropped to 39, 38, 37. And it was like, okay, well, first of all, I was really angry at GM. I said, you should have instituted a dividend as soon as Ford instituted a dividend, and you didn't. You should be buying back your own shares. You have a share buyback program. You should be supporting your stock at a price. You're going to lose all your institutional investors, and you're not. You should have spun off Cruise at a $50 billion valuation when you had the chance, when it was hot, but you decided to keep it. You've got to go. So it was like this Mary Barra's got to go. All of these boneheaded decisions because it didn't belong there. But I underestimated how cheap the market could make it. It was trading at one point, I think, at 3 times its cash flow. That if you bought it and you just kept all the cash flow in 3 years, you got all your money back. So dirt cheap. It was being priced as if it was going out of business. Liquidation value, selling for less than book. I finally gave up. I sold a bunch of calls on it. It went up, and I was glad to get rid of it. And then I got into it again later on. But truth be told, all in all, GM probably still owes me money, even though I've done fairly well on it since it's instituted its share buyback, just in selling the puts, and I do it heavy. I've done fairly well on it, but it still owes me money. That was a big loss. That was a big one. That one I didn't like. I think I had 112,000 shares at one point, and it was like every dime was uncomfortable. It was like, God damn it, every day red, every day, red. You know what that feeling is like? Some of you out there, I'm sure, probably know that feeling. When you have that feeling, when you know that feeling, you are, it pointing out somebody else's losing position is like walking around saying, ha ha, your mom died. Ha ha, ha ha, how's that feel? Your mom died. How's your dead mom? You know what I mean? But it's the same thing. It's because you know what that loss feels like. So you don't do that. You don't walk around saying, ha ha, dead mom. But for some reason, some people feel that it's I don't know if they feel that they're making friends by doing that or what, but they feel they want to point out your losing trades or the ones that went against you, but they don't. When it's going in your favor, you don't hear anything about them, right? Just don't be like that. Don't walk around pointing out people's dead moms. Can you talk about a previous time you made we did that. Did you watch Druckenmiller interview on Good Company? No. Your numbers seem to be up. Yeah, almost 200 on a live feed, which is light. I mean, I see some channels, they have live feeds, 3, 4, 5,000 people, but I don't think I'd ever get that for the type of audience that I have. I don't think I'd ever get that, but they are up. So the nighttime seems to be a little bit better. Starting in January, I have a new background. You won't see this behind me anymore. You're gonna see that. And I have a new desk coming in. Oh, it's a beautiful desk. I'll show you when it gets there. And it's going to be this way, and I'll have a background behind me. And I am trying to make some changes to what I do that is a little bit more easier to watch. Right now, what I'm doing is, and I do this with the Q&A, is I read every question and I answer every question, but I don't spend a lot of time with it. But I'm going to change that in the new year so that I'm going to read till I find a good question, which I can then spend some time going deeper on, and it would be of more value as opposed to me spending 15 seconds on this question and going to the next one. So I am going to upgrade the format a bit, and I am thinking of moving away from right now on my videos when I do things, I use the black screen a lot. I just sort of write. I'm thinking of moving away from that to something that is more typed out, like a PowerPoint, but not a PowerPoint, because sometimes my writing is hard to read. But taking the production quality of what I do and moving it up a bit. So if anyone has any ideas of what would be interesting or how I could make this more relevant for you or more interesting for you, where you have a question about something where you know you want to learn something about something as opposed to hearing my opinion about something. Everyone's got an opinion, right? So for me to just say, what's your opinion on this? What's your opinion on that? I don't know that you get a lot of value out of hearing one guy's opinion. But I do know a lot about how things work in terms of different theories of way of looking at things, in terms of, the more economic, finance, accounting background behind things. So I'm thinking of really trying to focus it on that instead of I think all the time, because everybody thinks, right? My views on crypto are well known, yet crypto keeps going up and people keep making money in it. It's just not my thing. I think it's foolish. Still, it's winning, right? So you have to recognize that, well, I'm probably not the best person to give advice on crypto because I think it's ridiculous, but it's winning. It's winning. I think that there is no God. I'm an atheist. However, there are more people who believe in gods than don't. So I'm kind of in the minority on that. So my opinion, I think, is not that important. You are absolutely right. I greatly appreciate Dr. Mark Meldrum's opinion. But I think he's a bit emotionally biased against Trump. No. Again, it's my opinion. No, I'm not. I'm not emotionally invested in this. As I said earlier, I just recognize the nature of the beast. What do you think of financial sector as a starting point to fundamental investing? Financial sector, challenging. Consumer sector is probably a lot easier to understand. Consumer staples is super easy to understand. Consumer discretionary is easy to understand because the consumer is easy to understand. Financials, you need some very sophisticated financial knowledge to understand that whole maturity transformation, the whole idea of how of wholesale funding versus what they're doing on the other side. You have to understand the hold to maturity aspect of the balance sheet on some aspects. It can be challenging to understand a bank and understand financial sector. If you want to start off easy for fundamental investing, probably consumer staples is a great place to be. BCE and NEM registered accounts. Don't mind holding the yield thesis with only calls at my disposal. How would you approach this down 20%? Bell surprises me on two fronts. Bell surprises me on why they would buy the American company they bought. I have a hard time putting that together. I still have a hard time with it. But the yield, the dividend yield is nice, and I don't see Bell canceling that. Okay, they canceled the growth. They had to do something there. It would be a step too far for Bell to cancel that dividend yield. That would be a step too far. So I don't see them doing that. I don't see them getting much elevation for at least 2 or 3 quarters. This fight for customer base has to end first. So for Bell, if all you have are the ability to sell calls, unfortunately, Bell doesn't have a lot of premium in the calls. If you go too far above, like right now they're 38. If you go out to December and you look at the 40s and the different 41s, it's not a lot of premium there. And you don't want to get 20 cents in premium just to have a mini rally and be called away from you for the 20 cents in premium you would get. It hardly seems worth it. Especially with big dividends, with $4 in dividends a year, that comes out of the call. I'm continuing to hold mine. I have it in registered accounts, and to me, it's like, that's the whole point of the registered account. I don't need it, and I like the cash flow coming in. I'll take it. I look at it as it's a long-term cash position because it's a network. It's not going away. It's the third largest in North America. Networks are not going away. Newmont, I'm getting a little bit more concerned about. once something is down 20% off its highs, you got to start thinking, well, that's a bear market for the underlying, right? Getting a little bit concerned about Newmont. If gold doesn't start getting a bid, if I see the US dollar dropping, then I'm okay. But if US dollar keeps gaining strength, and that's the narrative, that the US dollar is just going to get stronger and stronger and stronger, then I would get far more aggressive in selling calls on Newmont, and I wouldn't care if I was selling calls and booking a loss if it got called away from me. I would be looking to hedge out or generate some revenue or some income on it very quickly. Yeah, but Bell, being that it's sort of utility-like, I don't think it's going away. We are 3 hours into this. I'm going to scroll to the bottom and read up. I'm only skipping about 20 comments. Would love to help in production if stuff from my YouTube page interests you in any way. Fair warning, it's in Hindi. No, I don't think it's going to help me. You still haven't given us house tours, both in Canada and Costa Rica. This is coming up soon. All of my living room's almost done. I ordered custom made furniture. It looks really nice. The artwork's almost complete. The rug is I bought the rug. It's just being serged right now. The coffee table's being made. Coffee table's like, all said and done, is going to be like 1,200 pounds for the coffee table. It's a 5x6, all in wood, special type of wood. 1,200 pounds. You have to bring it in pieces and install it here. You can't move it in here. You have to bring it in. Each of the beams that are making up the table are 200 pounds each. It's going to be magnificent. The table is in. The tabletop alone was 250 pounds, just the tabletop. But that came in yesterday. It's 8 foot long wormy maple with a nice finish on it. The chairs are being made in Oakville. They're custom chairs. I'm almost done in here. The desk coming in here, this desk is leaving. This is just a office type desk. And I have a custom made desk coming in, which is cedar, cut in the middle with live edges, and the live edges flipped in with this black smoky epoxy running down the middle of it. Looks freaking great. And then the backdrop, wait till you see this. This was hung on the wall just last week. Wait till you see my backdrop. I'm not going to show it to you now, but wait till you see my backdrop. It's incredible. It's incredible. It's going to be great. Going to be great. Let's see. I would like a peek at your idea notebook. Right now, my trade ideas are very scattered. I try to write, but it's like I have ADD. Having a guideline in your note taking would be nice. Like my ideas, I don't know if any ideas I have would be suitable for you, right? I mean, I make ideas I have ideas that are suitable for me. What tips do you have for someone in their early 20s on how to deal with failures? Well, don't let the failure define you. I would say, look, you're going to have failures. You're going to have failures. The more interesting lives are ones with failures in it. I mean, if you succeed at everything you do, you're not stretching yourself beyond your boundaries enough. Almost every breakthrough has been preceded by failure after failure after failure. Almost every breakthrough. SpaceX had how many failures before its success, right? So failures, you learn more in failure than you do in success. So I would say, don't worry about your failures. If you're repeating your failures again and again, then you're not learning from them. Then there's something wrong there. But you're never going to be done making mistakes. Trust me on that. Life, even at my age, life still has lessons to teach me. And I tell you something, for the people who are around me, they've heard me say this before. I'm tired of learning new lessons. When am I done? I'm sick and tired of learning new lessons. Please, just let it be done. But if you're not pushing yourself, if you're not building, if you're not growing, then you're not learning because you're not making mistakes. You're going to make mistakes. I make mistakes. I mean, I put stuff in the applied level, and I see, based on views, nobody's interested. It's like, well, I thought that would be a good one. Damn, all that work, so I still make mistakes, and you learn. Don't worry about it. Don't let it define you. And if failure keeps you down, that's a problem. the the danger with too much failure is you end up in a place called learned helplessness, and you can Google that. That's a real that's a real term. Learned helplessness is that you get so programmed to failing that you no longer try anymore. You become helpless. You've learned to become helpless because nothing works out anyways. Nothing works out anyways. You have to, I think, debrief. Something didn't work out. You got to sit down, and this is the hardest thing to do for any human being. Brutally difficult. You got to be honest with yourself. You got to say, why did I fail? And the easy thing to do is blame that and blame this and blame those people and blame this and blame that person and blame the weather. If you start blaming a whole bunch of other people because you fail, the conclusion you arrive at is there's no need for me to change. It wasn't my fault. It was their fault. It was everybody else's fault. I just need to be around different people. Take a good hard look at yourself. Why did you fail? Did you put in the effort? Did you put in the time, or did you say, well, I really didn't try that much. I didn't give it my best. I don't have the motivation. I get bored easily. I mean, you got to be honest with yourself of why the failure happened. Most failure is personal. It's there are times where you fail through no fault of your own. That is not most cases. Most cases you fail primarily through fault of your own, and you have to find it. Why are you failing? And then learn from it. All right? But don't be afraid of it, because it's going to happen well into your 40s and your 50s and your 60s. You're going to fail at things unless you never leave the house and you buy T-bills. Right? Mark, for AP level options, Interactive Brokers showed the probability of max profit loss. How is this calculated? Can a layman calculate it? It's calculated on a distribution. It assumes a normal distribution, and it assumes the deltas are the probabilities. So yeah, you could probably calculate it yourself if you say, well, how much of the distribution do I have? So let's say a stock is at $50 and I buy a $5 call. There's almost 100% probability I'm going to make money, right? Or that I shouldn't say that I'm going to make money. There's almost 100% probability that my option will end in the money. Whether I make money or not, it's a different story. But you can calculate the probability of the option ending in the money. Please don't remove the pen. However, it really helped. Oh no, I would still use the pen. So in other words, the presentation on the screen would have a higher production quality, but I'd still use my pen to draw things from here to there. I would just transfer it onto the screen. Rather than writing out my notes, I would have it done in a higher quality way, put it on the screen, then use the pen to, write on top of that. What's your lifestyle? The things you do on a daily basis? I don't even know how to answer that. The things I do on a daily basis. I'm always learning. Always learning. I've become very concerned about what I eat, when I eat, my weight. Got to get my weight down. Become more concerned about my health and little things that I never really paid attention to before. I work out almost every day. Yeah, that's basically my lifestyle. I don't drink. I don't smoke. I don't do drugs. I don't go to clubs. I walk out that door back there only when I got something to do. I don't really go anywhere. Everything I do is right here in front of me. These two computers, these two screens. It's my window to the world, right? Um, you mentioned you practically never use DCF for valuations. That's true. Does the applied level provide techniques other than DCF like comparables? It will, yeah. So I say next semester, but February, I'll probably start the valuation part of financial modeling. We'll value Costco. Um, we'll use a DCF. I'll show you how to use a DCF, but you'll see that more assumptions go into it. And I don't know that the price you arrive at is as important as how sensitive that price is to changes in assumptions. That's where the real value lies. But the price, I wouldn't consider it any measure of intrinsic value. Forecasting out 5 years in any company, even a stable company, is pure fantasy. By the time you get 5 years out, it's more than likely a linear forecast, and it's basically a forecast that says if things stay as they are, this is what will happen. But things never stay as they are. There's always exogenous events that you can't predict. So I don't know that it's that valuable. Predicting out 1 year is actually pretty good to do, especially for stable companies. You could be pretty accurate going out 1 year. If you're doing quarterly forecasts, you go out 4 quarters, you could do pretty good. At that point, I would rely on comparables. Right? At that point, I would just look at how am I going to value this? What multiples am I going to use? And how does it compare versus the industry, a peer group, versus other competitors? Taking into account the return on equity, the return on invested capital, et cetera. Is a premium to the market justified based on these other things? So you can come up with some sort of relative valuation. I think that's a lot more powerful on the buy side than a discounted cash flow. Discounted cash flow is more of a sell side thing, more of an institutional sell side valuation technique. A buy side, I don't know really would ever spend a lot of time on a 5-year forecast. I think they'd be looking out 1 year because it's what the market is going to do over the next year that's more important, not some 5-year forecast. And you can find a stock that's overvalued based on discounted cash flow, but is undervalued based on comparables. And in a market where rates are coming down, that is momentum driven, you'd be a fool. You'd be a fool not to overweight it, right? So I much prefer a comparables approach than a discounted cash flow approach. All right, one more, and then we will end it. Thoughts on Uber being distribution for robo-taxis? They've got the platform already. They've already got the platform. You need a platform, and you need a critical mass of eyeballs. They're in, 140 countries around the world. How many millions of people have Uber on their phone? It's already there. It's already there. The platform has already been built. To build a platform, to replicate Uber, just to build that out, is going to cost you tens of millions of dollars, and how many years of negative cash flow while you continually invest in that platform. Whereas if you use the Uber platform, you're cash flow positive without the tech stack. You're cash flow positive on your first ride. So all you have is your CapEx for your vehicles. Your CFO is going to be cash flow positive right away. Well, why would you replicate what already is done on a global, massive scale? Uber will be the Netflix of robotaxi, where there are competitors, but if you had to cancel all your services except one, Netflix would be the only one standing, especially this week. Who's not going to sign up to Netflix now with Tyson and Jake Paul fighting this week, right? It's this week, I think, this weekend, live on Netflix. It's going to be huge. This is a big boost to the quarter. Did you see the price of Netflix today? I mean, I mean, it is on fire. This is going to be huge. It's not on any other platform. They could have been on any platform. They could have created their own platform to do it, but you already have the eyeballs on Netflix. You've got the eyeballs on Uber. You've got the app downloaded on how many smartphones around the world, right? Right away, you have an audience. You have a robo-taxi. You have an audience of how many millions of people the moment you sign up, the moment you put your vehicles on the platform. There you go. Yes, they will be the king. Tesla still says 2026 by the time they have their robo-taxi. Just because Trump won doesn't speed up the technology. Just because Trump won doesn't make their technology better. The market's got it completely wrong on this one. 2026 is too late. It's too late. Waymo's already way ahead and getting better. It's already too late. So yeah, Uber will be the robo-taxi platform, hands down. Uber will be it. All right. I think we'll end here. I don't see anything else. Okay, there we go. I'm not seeing anything else that really jumps out as being something. Okay, well, next Wednesday. This was 3 hours, 20 minutes. Solid 180 people on for the whole time. That's pretty good. Any suggestions you have at all about how this can evolve, or what you'd like it to be, or where you'd like to focus? Any suggestions at all? Just go to the last market outlook that I put up, not the Q&A for the market outlook, but the last market outlook, and just put your comments down there saying, why don't you try this? Why don't you do this? Here's an idea. And then, I'll look at where all the thumbs up are on the comments. And, I got a lot of knowledge up here about economics, finance, and accounting, and a lot of opinions, but everyone's got opinions, right? So maybe you want to focus more on, the right brain stuff that I have, and leave the left brain stuff out of it. Maybe use me in that capacity. All right. 11:23 over here, hot tub time for 10 minutes, and then off to bed. Does this do anything on no, nothing happens. If I do this, there, see, I get that kind of stuff. 2 hands waving does nothing. All right. I will see you guys next Wednesday. Ciao.